to say always. I mean, obviously the really
The Bitcoin price is currently $50,761. Bitcoin to USD here on the chart, the BTC USD 30-second chart. That is, of course, Bitcoin versus the US dollar, the United States of America dollar versus Bitcoin. Oh, and that's the 30-second chart. So if you're looking at this thinking, wow, what a great big positive rise up we've had, that chart is of course just the 30-second chart, but it's not a million miles away in terms of the big rise up that we've had from the larger time frames when you were looking back over the last chunk of time since 4 p.m. yesterday. No wait, not since 4 p.m. yesterday. Since 4 p.m. on the 28th of February up to where we are just now. We've got a lot to talk about in today's show. So, without any further ado, let's crack on. Thank you so much for joining me here to look at Bitcoin versus the US dollar. We'll also be looking at Ethereum, Chainlink, and Tezos. So, there'll be plenty of cryptocurrency technical analysis in the show today, and we'll perhaps take a look at stuff that people suggest or ask for or whatever. Let's roll those intros. Hello my friends, welcome to the show. So I see I've got a little bit of my screen up there, just give me a second. Oh, is that perfect? It's not quite perfect, but it's perfect enough for me. Here we are, enjoying the price of Bitcoin at $51,000. $51,000 Bitcoin. Whether in the future we look back at these times and say, wow, the prices were so high, or we look back and say, wow, the prices were so low, it doesn't really matter, because we're traders and we're here enjoying the price as it is. Thank you so much for joining me, everybody. It's good to see all of you out there, and I've already said hi to some of you in the chat box. That's very, very good. Good to see you, Formica. Good to see you, Zoner. Good to see you, Stanley. Good to see you, Swisher. And that's everybody that said hello in the chat box. Be sure to hit hello. Drop me a wee hello in there if you like as well. Lovely to see that we have 5 concurrent viewers here tuned in. So maybe I said hello to everybody who's watching live at the minute. We're not here. Well, we're not all about the quantity, we're about the quality here on the channel, ladies and gentlemen. Well, in that sense, in that case, how about we just get on with stuff, right? Let's get on with stuff. Could we see this inside Pitchfork carry prices to the next support and resistance levels? Could we see that happen, ladies and gentlemen? That's the question for today, taken from the low just before we rose up to the high that we had at 52,671, then back on down to the low that we just had there at 50,500, and wrapped around the price. Now, of course, this is just really just to make a point more than anything. The pitchfork that I drew on when the prices were down here. And the point that I'm trying to make with this pitchfork is quite simple, really. The next area of resistance is as we identified. And of course, that was where profits were taken in the move that led us up there. Now, the move that took us up there is the same as the current move if you're looking to play between these levels. Really, you've got your point at which, you know, if the prices break down below this wick here at 50,000, then it's no fun being in that trade any longer. So looking for a sort of 50,000 pivot point on that one, and then if and when the prices make their way up to the 52,000 750 price point up towards that 53,000 area, then we'll be looking to take some profits, of course. And along the way, will we see this pitchfork in the background give us any idea as to how the prices are going to operate? As you can see, recently what we've done in terms of the Bitcoin technical analysis here on the show is, well, it's in keeping with the nature of all the technical analysis for Bitcoin that we've done ever since we started the channel, to be perfectly frank, and it's been great. And we can see here that the first move that we were really looking at over the last wee while, from this chunk down here up to this chunk up here, was the move to be had. And then afterwards there was this period, of course, of sideways price action, came back down, retested that wedge idea, moved on up the way, and then the next trade that we had, as we broke past the area of liquidity towards the top side here, giving us another perfect entry, took us up perfectly. Now of course this was just simply put in a 3 to 1. We were talking about this live on the show. I wasn't saying to people to necessarily take the trade, necessarily all that sort of stuff, but we because I'm not a financial advisor and I don't do financial advice, but it's certainly lovely to have seen that work out for us so well. So here we are on the 3rd of March. We did the last stream over there on the 1st of March, right? Just checking. Yeah, it's the 3rd of March today. I use my watch for that because I'm old school. So we were talking about this and the danger then of going down past these areas. Well, of course, then we did see that that was indeed the case as the prices moved on down past this key inflection area. This cracked right on down past that to a retest of this wedge area, dropping down 3% in space of really not that long a time whenever they actually started kicking off. Then when the prices did actually make their way back up into this area, came back down for a retest of that yellow line and the white line. I mean, it really depends on, you can choose whichever areas you like, because we mentioned them all and it was really a case of saying at the time, it's up to you how you want to actually trade this one. Ultimately then, of course, we went on up the way. You could have taken this for a full 5 to 1 happily, in fact, 7 to 1, 8 to 1, that sort of thing. But we'd already spoken about this zone as I drew it in here. As you can see, my wee background shaded box area could have probably, coulda, shoulda, woulda have been just like this instead. But there you have it. Anyway, this is the situation that we find ourselves in now. Are we going to be, if you know, now that we've got up above the 50,700 area, are we able to maintain that and look up the way, or indeed, you know, will we see the prices dropping back down? At the minute, the prices being 51,000 certainly makes it a hell of a lot easier to manage your risk with a look towards these higher targets than it would do in any of these other zones, you know, than it would do in the middle of where we were obviously taking our profits at before, or in the middle of these areas. And you can see, I suppose, it doesn't take much experience with charts. I'll just actually hide the Ichimoku cloud now that I say experience with charts. The so-called at a glance indicator maybe makes things a little bit difficult for people to see what's going on. Yeah, as you can see with what we've been doing as we trade, as traders, is we're obviously finding key areas in the market, choosing a reasonable risk to reward trade, not repeating it every split second if you get knocked out, obviously, and then upon areas where it becomes, you know, second bite of the cherry, etc., we're able to take that with relatively low risk and win with these moves, you know, and win with them. So that's what that could have been, but we talked about it just like that on the channel just for the crack at the time. And this is what, and I mean, I'm not even sure exactly how the price action panned out in the immediacy following the live stream last time when we talked about it, but that's kind of besides the point at this you know, now that we're here. And it's the same sort of notion, right? It's the same sort of notion, and that's the next area where we have already been. Now, if we go back up there again, what does it really mean in terms of looking over to the left on a broader term time frame? The fact of the matter is that we're above this red line that we spoke about already, this red serrated line here, kind of orangey, rusty coloured area, at 51k, essentially 50,700 and something, and it was putting us above the body closures over here, changing the structure ever so slightly, giving you this kind of feeling of a head and shoulders in terms of how they've got this. If you were to be thinking about that as one, that is your head and that's your shoulder type of thing that we've moved up past, and then we could be going on up for more moves up the way. I don't like that. I don't like looking at head and shoulders in that way, which is why you very rarely see me talking about them on the channel in that regard. Instead, we're just talking about what that was at the time with regards to this pattern. You know what it is TradingView comes up with these little dots to suggest you can move something while you're still in the drawing tool. That's obviously problem, that they shouldn't have that. Anyway, yeah, when we broke out of this, and as you can see, I was talking about it as being a retest there. It wasn't necessarily, you know, I'm not going to get bogged down in the details of all these things. Anyhow, since then we've moved up, and regardless of how you're looking at this section, now they've taken away that red line, really it is the question of the structure here at this point. Are we able to stay above that zone, which is the 50% Fibonacci retracement line, off of the highs down to the lows over there? So we're at the 50% line. Can we actually maintain that or not? Because if we can't, then despite the fact that we've actually come up higher than these areas, the highs of the 24th of February and the 25th of February, we're still actually structurally, you know, we're above these. This area is above this area. Okay, great. However, how important is that area really? You know, how important is it really? Well, it's quite significant because of these areas. You know, we've got 4 significant reasons for that to be important. We also know as well, in terms of a 5th reason, the overall wedge that led up to that, for instance, as well. And we know in terms of the regardless of how you draw in this line here, whether it's coming down steeper or cutting over here or whatever, we're past this key area. So it is important in terms of the pattern of what led into where we are right now. But but until such times we've actually moved past and broken this area of the 618, we're just kind of in that zone where we expected the prices to be at, more or less, which is what then makes it so what I'm looking for at the minute is to see, can this inside pitchfork carry the prices up to the next area? You'll be wondering why inside pitchfork. Let me just show you. There's obviously different ways of looking at it. There's your original pitchfork. There's your shift pitchfork, there's your modified shift pitchfork, there's your inside pitchfork. And the reason why I'm looking at it when I drew that in at the start, and I drew in with an inside pitchfork, was because I was saying, you know, we've had a big rise up here, and there's going to be some trepidation in and around about these key areas, and I want to see give myself some context as to pullbacks from a negative perspective, i.e. the inside perspective on the pitchfork, in the face of the price action that we've just seen rising us up towards this area, you know. And that's essentially the basis for that. You know, because we're seeing a potential for a strong pullback from the 618 area down to an area where we previously identified as being a profit taking target, and this was obviously key for us, and that's where it leaves us with this one, and that's the trade that you've got at the minute, and we're doing all right there. So that's cool. I'm just going to check in with the chat, taking it easier today with the episode, making things nice and simple. Good to see you here, Trade Spotting. See how everybody's doing here. Dude man, good to have you here. Hello, Rocky and company. Hi, dude man, mate, brah. It says Zoner. I'm listening at work, so let my boss know how long until I'm crypto rich enough to leave my job. Yeah, you better start incentivizing your staff a little bit better. Think about it. You've only got this guy with you for another 6 months or so before he hightails it away off. So watch out, boss man. I'm currently trading Ethereum. Don't have enough capital to trade multiple coins. Should I switch to Bitcoin? Funnily enough, I can see you spelled capital with OL there, so you're from the United States of America. Hello, my friend. Of course, that's capital, like where Trump fans like to hang out. Capital. Funnily enough, little thing there. Anyway, I'm on that dyslexic spectrum, I suppose, a little bit myself. I just noticed that. Just thought I'm observing guy, whatever. Josh Lester asks, why does my mustache smell like trout? And really, these are the questions which are hard to answer in life. With a little bit of soul searching, maybe we'll find some answers. We just have to stick with it for now, regardless, you know. But but good luck there. Anyway, your question, dude man. I'm currently trading Ethereum. I don't have enough capital to trade multiple coins. Should I switch to Bitcoin? So, no, would be the easiest way to answer that question is to simply say no. And it's a nice little transition point as we move over to taking a look at Ethereum. In fact, shall I just do a real quick? I'll just do a real quick snippet here. Everybody, stick with me. You know you know the format of the show, everybody. All 9 live viewers that are out there at the minute. You guys all know the format of the show. So, really do appreciate everybody hitting like. By the way, I'm loving being able to see that currently there's more likes than there are viewers, and that's always good. Okay, so we're all right. Let's just do a real quick episode style thing for the folks back home. That's what we like to call it, for everybody that's not tuned into the live video. So you know, when I get to this little clip here, I'll be man, dude, don't say that. It's totally fine. No, I've always been bad at spelling as well. Don't worry about it. Exactly, Josh Lester, there's an answer for you. Maybe you're a bear, says TradeSpotting, and I think that's maybe the joke that Josh Lester was getting at. I was wondering that myself. Right, so I'm going to answer your question, dude. Right, don't worry about that. But just before we do that, I'm going to just make a real quick bit so I can clip it out from this live show for the folks back home, like we like to say. Everybody send your best wishes to them, and be aware as well when I do these things. I think you already know it when I do these things that you could say rude stuff in the chat box and get away with it, so look out for that. Don't try not to say too much rude stuff in the chat box. Okay, okay, so I just need to get my intro clip lined up. Has Streamlabs gone and crashed on me? No, it's okay, right, so Bitcoin prices skyrocketing up the way, $51,000 at the minute on the old BTC USDT pair. If you're trading Bitcoin like myself and of course the rest of the Rocky Outcropticians, you'll be wanting to know the key entry and exit points, what our current targets are and the current shape of the market. Let's get into that. I'll be telling you exactly how to trade this one so that you have Bitcoin financial success in your near future. Thanks for joining me. The question for the show today is, could we see this inside pitchfork carry the prices to the next support and resistance levels? So, hi, welcome here to the show. My name's Rocky Outcrop. We really do appreciate it when people drop a like and a subscribe to the show, and I'll see you again in more episodes. But this is the current question for us. We've had a few moves recently which have been good. Traded this up outside of what was a wedge here on the charts. We came back in for a retest after a profit taking target. Lovely to see that happening, always giving you that confirmation that you were out at the right time. Then the next move up the way, we traded up towards the 51k zone, thinking that that would be a wise enough place to take profit at, with of course the potential to carry that on up towards the 618, and ultimately that's what's happened with this circled zone here, just showing us that there's the golden pocket where we found resistance at. Well, we didn't actually crack into that like the proverbial egg, so it remains more or less unbroken. Are we still looking for that target next up? And that's the next real trading move for you. So just to help you with your old trading, telling you the exact moves that I'm looking at right now with regards to trading Bitcoin, then I'm talking about being able to manage risk in amongst this level of the where 50,700 is at. That offers up a decent enough entry. This looking back down to the previous wick that we had over here at 50,000, sort of 250 or so, and saying, well, I'm not really keen on seeing the prices dropping down below that, and hanging on to that position with a profit taking target coming in there at around about 52,500 to 53,000 or so, you know, perhaps 52,750, with a view in the short term, you know, going down to the 1 hour time frame, for instance, to whether or not this pitchfork might show us the way and between where we are up to the higher up. Why am I using this pitchfork? What type of pitchfork is it? Well, it's an inside pitchfork drawn in from the lows down there 2nd of March up to the highs up here on the 3rd of March, down to the low that we had just at 3 p.m. on earlier on today. And then of course we have seen the prices carry on down since, but this is when I drew this in at 3 p.m, so just showing you what I was thinking at the time. And as you can see, we're kind of in it around about these levels. Can we push past this median line of the pitchfork? So in the next wee while, looking at confirmation on this like next little bit of a move when we push past 52 to try and get out at the sort of 52.5 to 53 area. Of course, as well, then that doesn't really do the overall price action justice, but just for the broader term viewer, then what we're really looking at in terms of the potential next move for Bitcoin, if you're really thinking about this from a broad perspective, is potentially as high up there as a sort of 66,666. That's what we'll call it, or maybe we'll call it 69,000 just for the lols and the laughs. I mean, the actual price is 68,234. So I'm kind of tied between going with all the sixes for the whole devil number of the thing and saying 69,000 for the lols of that number. But that's what we're looking at, 68,000 as the next one up, you know, as the really big one up. Other big targets along the way actually between where we are and where we've got to go, coming at our previous all-time highs at 58 grand. And there's plenty of moves to be had up there, keeping some of your stuff on the table here, whatever trades that you happen to have launched. If you see some good side of your success here, just keeping some meat on the dinner plate to try to see if we can catch any of these along the way might be something to look at, and managing my risk accordingly. I'm always going to keep it safe as I'm trading here. Recommend everybody does the same, but at that note, I'll say I'm not a financial advisor. Always do your own research and hit that like and subscribe button. Rocky Outcrop, best YouTube TA channel, and I'd love to have you back again. Okay, cool. Hi Swisher. No, I've not done that yet, and I'm going to do that just now. I was just making a clip there for the folks back home. You know how it is there, you know how it is, right? So that's what it is. And if you're just joining me, by the way, for the first time here today, and yeah, I know, check it out, look there, there's only 12 people watching or whatever, okay, right? But if you're just joining me for the first time today ever, what we do on this show here is FOMO free technical analysis. Got this nice lo-fi beat up in the background, and I'm talking fairly calmly about the price action. Could I have screamed all that information at your face about the next big move? Probably could have, probably would have got some more views as well overall, but what we're trying to do here is to tell people, you know, the real stuff. We're giving people the skill for life. That's the mission of the show, is to help transform individual people's lives for the better on a one-by-one basis. So if you're just joining in here, then be sure to take part in the community, get involved and all that good stuff, and you will definitely and absolutely 100,000,000% thank yourself for having done so later on. It's a hidden gem on YouTube. Ladies and gents, it is a hidden gem on YouTube, it really is. Okay, so first off, Dude Man asked the question, you know, and it's a good question. I think it's a really important question. So I'm actually going to copy this over as I jump over to the Ethereum chart. Dum, bum, bum. Is this the one that I was looking at earlier? I ask myself. Is it? Because I should have some right in here. Yeah. So the theme for this little snippet when I do it will be what I've written down there. Okay, but what I want to talk about first is this question from Dude Man. Whoops. Is this going to give me one of them? Yeah, Dude Man. Ask that question. 03 2022. There's a quote attributable to Dude Man on the Rocky Outcrop channel chat box. I'm currently trading Ethereum, don't have enough capital to trade multiple coins. Should I switch to BTC? I want to break this down a little bit, because in this question, whether in the true, honest, and I use the word with the greatest respect, naivety of this question is a lesson for people who have actually maybe been through some more, you know, learned a little bit more about trading than perhaps Dude Man has. and has forgotten something which is implicit in this question. So I really want to underline it and say thank you to Dudeman for asking this. I'm currently trading Ethereum, right? Great, great, great. But the important part of this is I don't have enough capital to trade multiple coins, okay? I really want to make this clear to people. Really want to make this clear to people just how good a question this is by Dudeman for having asked it. So good on you. People out there, if you're finding yourself in this situation, then what you're probably experiencing is a good deal of temptation at the same time to actually increase your leverage, trade, you know, or you start using leverage / increase your leverage and trading across multiple coins. And while everything might look great at the start as you set those initial plates spinning and you go around your circuit spinning the plates, eventually, you know, you build a house of cards and things fall down very, 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 very quickly. Okay, so be very, very careful, especially if you're using cross margin on the likes of well, for instance, Binance, for instance, who offer that with their futures contracts. Now, I also want to say that if you're using isolated margin, it doesn't make it any safer necessarily than cross margin. That wasn't the point I was making there with regards to cross margin. I was making the point with regards to spinning too many plates, spreading yourself too thin. A couple of little trades, tips for people. Great tips when it comes to trading is to choose the coins that you're going to trade. Okay. Then trade them. Okay, now this little tip here seems so dismissible and ignorable. Really, it seems like not that big a deal, doesn't it? Why would you even bring that up, Rocky? Reasonable question to ask. Well, it's something that a lot of people who, especially those, it's one of these problems that happens when you gain a bit of experience, is that you can choose coins to trade because you find a decent trade on them, and then you don't go back and you don't really look over what you're doing, and you're not really trading them. Also, if you're trading certain coins and then you've got other ones that you look at from time to time, unless you're looking at them for educational sort of resource, looking at it to try and form an opinion about the market, etc., like we do on the show, which is highly recommended. But if you're actually, you know, checking in with prices all the time, say for instance you're trading Algorand, Tezos and Chainlink, well, that's what you were telling yourself, but you were actually only really trading Tezos and Chainlink, and you had positions on them. You would open and close, and you would do that throughout the week. But then once every couple of weeks, you take a trade on Algorand. You're dedicating like a third of your brain power to something that you're not really interacting with. Okay, so there's those two things. First off, that I would like to say, which get overlooked when people, you know, and I think that this is implicit in the question that Dudeman asked, and I really did use that word naivety with the biggest dose of respect that I could get for it, because if you read the likes of Michael Douglas, you'll find that you know, and he's an expert, was an expert, rest in peace, all that. He was talking about how the mindset of a new trader, the novice trader, is actually far closer to the mindset of the actual professional trader than that big chunk of time in between where you go from knowing nothing to knowing everything you need to know and then acting accordingly, and you've got your psychology sorted out, you know, and that. So you have this strange thing happen with a chart of your trading. If that's the y-axis, there's your x-axis. Here's your knowledge, your knowledge about trading. That says knowledge there. That's a word that says knowledge, and you got 0 to like infinity, all right, up here. And then they've got your success, or the correct, you know, the tick, the mindset, the correct mindset. That says mind. That's what that says there. Mindset, right? So your mindset and your knowledge, and it starts off here, right? And you're actually up there when you start so often with 0 knowledge, and then your success and your ability and everything else goes down, 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 and down as your knowledge is increasing. Okay, 90% of traders then just pop out here at this point, and they're like, okay, this is not the gig for me. And then a lot of people find it going up here, and at some point along the way, they'll look back and they'll think, F me, I was actually closer to being where I am now when I started than the entire time in between. That's a common phenomena in what is the hardest thing to do, right? Is also commonly accepted. Now, of course, you could talk about other things being hard to do, brain surgery, rocket science, whatever. but this is commonly accepted as probably the hardest job, right? It's probably the hardest job you can get. That's what you're doing now, ladies and gentlemen. So that's, funnily enough, how the hardest job ever starts out. Now, brain surgery isn't going to start out the same way. You're not going to suddenly be as close to the mindset as you need in the first day of brain surgery. You know, you'll be really damaging some people's brains if that's how you perform. Okay, so then to go into the question in a bit more detail, you know, so you don't have enough capital to trade multiple coins. Very good, well recognized. That's an excellent recognition on yourself. Give yourself a pat on the back for that. Maybe I should switch to BTC. Should I switch to BTC? Well, you've been trading and you've answered your question in yourself, you know, it's like, or whatever, you're currently trading Ethereum. You're going to trade. Are you going to stick with it when you change? Have you benefited from trading this one so far to where you've got to? Can you take the sort of your familiarity with the markets and carry you through to another level of trading, just sticking with the one? You know, does that make sense to you? And also as well, like, we're talking about two coins, we're not comparing apples and oranges here. Like, if you were to say, I've been trading mostly Bitcoin, should I switch to random altcoin, Telcoin, for instance? Should I switch to trading Telcoin? Like, definitely not, because you know, you're talking about an established market which is liquid, etc, etc. Now, Ethereum's really just getting to that point now itself as well. So you're going from one where the liquidity, etc, is there mostly, and you're doing all right. So I would still say stay there. Incidentally, when I say liquidity, I know that you're not looking to fill massive orders with your account size, but what I mean is that you're not going to get markets moving primarily as a result of a lack of liquidity, which is common amongst pump and dump smaller coins, etc. All right. Okay, anyway, that's a nice little thing. I hope I helped you out there a little bit, dude, man. Good question. Thanks so much for asking it. I hope that everybody else watching along got a little bit of something out of that as well. Might help some people as with their trading. Okay, so if you're looking at that and you're thinking, maybe this appeals, maybe this means something to me, you know, like what does it mean? You know, maybe from that what you've taken is that maybe you do have the capital to trade multiple coins, but you're wondering why you've not got as much success. What should I do about it? You know, maybe I should trade less. But why should I trade less when there's so many opportunities out there, and you're looking for a roadmap to reconcile that inside your brain? Well, hopefully that little tidbit will be that transformative knowledge that you need, where you go, right, now I can see how I would be able to increase my overall success a little bit. My answer for you, dude man, would essentially just on the face of it be no. Then again, maybe you've only been trading for a short period of time. You're going to find a lot of information out there with regards to technical analysis, etc, for Bitcoin and all the rest of it too. If you have only been trading for a short period of time, maybe even you could consider trading something like Tezos as well. You know, there's these sorts of options out there for you, choices for you in terms of what you could be trading, right? They've all got their pros and cons. Of course, I would say that Tezos has been and will continue to be probably a really good coin for newer traders to get involved in. They want to get that exposure to the volatility that exists inside the markets without necessarily being involved in a coin that, you know, you might wake up 2 days later and it's the general circumstances surrounding it have changed to a completely new picture. You know, it's a bit more like that. Right, can you explain isolated margin versus cross margin, etc? Thank you. Okay, Felix, let's talk about that for a second. Big help, thanks for the time, dude man, you're welcome. This is kind of what I was talking about as well. You know, only 14 live viewers, that's cool. What we're trying to do here is on a mission to change the world for the good by helping make real change, affect real change in real people's lives. And you were a conduit for perhaps other people as well here, you know, just like how Felix asking his question may also help other people. So you've got an account. You've got an account, and it's it's a bucket of water floating around. That's the liquidity in your account, okay? And when you make a trade with isolated margin, then what you're doing is you're taking a proportion of this out of here into a smaller cup, okay? And that's I think that's the obvious part, right? Which is kind of obvious to everybody. I mean, we all know that's what it is, but that's just for if you've never heard the word cross before, what the concepts are. You've got cross margin where you're using this would be cross here. Sorry, I should have labeled this cross at the start. You've got cross where you're using your entire amount of assets, your whole capital. And then you've got isolated where you take a portion of your entire amount out and isolate it. Now there's a few distinct differences here. For one, isolated has got is you're talking about the margin here, and it's to do with the margin part specifically. You know, it's isolated margin. You know, is the key here. That the margin portion of itself has been isolated away from cross margin, you know. So there's a few interesting points about that. Is that you pay your entire margin up front, okay. So with isolated margin, you're paying your entire margin up front, okay. You're not paying it. You're not. Whereas with cross, when you open up a position, you're paying just your initial margin on that position, okay. So in a scenario whereby you've not got a limiter on your account, exactly, it doesn't say what leverage you're using, okay. Then you won't see this as obvious. But on the likes of Deribit, for instance, if you're talking, like, you know, so we'll stay inside the world of crypto here, right? So on the likes of Deribit, you don't get to choose. It says Deribit. What it says is up to 100x. Okay. And so do all the other ones that are like that, BitMEX, etc. Right, when you're using cross margin. Whereas over here, if you're whereas the likes of Binance, you actually choose. You know, Binance, you choose your margin, your leverage. Okay, on that individual position. So what this means is that when you're using cross and you pay your entire initial margin up, when you're using isolated margin and you pay your entire margin up front, then that's all you stand to lose. You can't lose any more than that. You can't lose any more than what you put in to open up that position, okay. Whereas over here on the cross account, then while you may be able to choose your leverage, such as with Binance, that what this is actually changing essentially is two things. Like it changes your max, right? It changes your max, but it also changes it also changes your initial margin, right? So if you say that you want to choose your leverage, right, what it changes is your max and your so when you open up your position, if you've chosen 100x on Binance, then it's going to say that you're able to afford however many contracts, etc, etc. But to open up that position, it's going to have a cost, and that cost is going to be 1% ish of the size of that position. Whereas if you use 1x, then you're paying a far bigger initial margin. However, you're still on cross, which means that all of your assets are actually there to support that position. Whereas on isolated, it's isolated. Now, one of the things about isolated margin is, one of the things, I see you've got a super chat came in here. I want to make sure that this actually appears on the screen. If it doesn't appear on the screen, then I'll be sure to fix that. As you can see, the jar doesn't appear on the screen, so they've just got the jar showing up. Where's my alert box? Make sure this is appearing on screen. Here. Okay, great. That should be that fixed. And then let me just replay that as well. Oh, it worked there. Perfect. So Dan Anthony says, I appreciate you, buddy. You're the best. I really appreciate that, Dan. I massively appreciate that. Okay, so one of the things that's different here is then that when you because it isolates your margin, then that's the maximum that you can lose. Okay, so and that's important to understand, because essentially what it means is you can't lose more than 100%, right? Lose more than 100%. Okay, you can't. Okay, your position will be closed when you've lost, and it'll depend on what platform you're using, etc. But your position will be closed when you've lost like the vast majority of that amount. So you've got so it's the difference between your maintenance margin and the fees involved in being liquidated. Okay, so off the top of my head, e.g. BitMEX is a 17% fee, I think. So you add that on top as well. So then your position will only be able to go down from the whatever margin you had, and we're talking about P&L here. Right? Okay, so your position will be at 0 when you open it initially in terms of profit and loss, you know, there or thereabouts, and you can't lose instantly. Alright, okay, one of the reasons why your position isn't at 0 when you open it is because obviously a lot of these platforms use the mark price as opposed to the last price to measure your profit and loss, and of course that's relevant when it comes to whether or not you're ever going to have your position closed on you, you know, so it looks at it versus the mark price, and that's a discussion for another day. But what you're looking at here is your P&L in an isolated position. It can't be less than 100%. Once it's gone down to some figure like 90%, 95, 97% loss or whatever, then your position will be automatically closed. That's in order to fulfill the margin requirement that you have to pay back to the people who obviously lent you the money, the difference between what you put up in terms of your position versus the you know, if you were 20x and you put in therefore 5% of the required margin for the position, then 95% of that's been borrowed from other people, and that then is paid back initially before you, and of course that means that you're left with nothing, and then your position gets liquidated, etc. Whereas over here on Cross, you can actually go into much more than can lose much more than 100%. You know, you can be thousands of percent in a loss as well if you wanted to. In terms of Cross, you can lose much more than 100%. However, the difference really then comes down to is your reasoning for how where you want to live in terms of the you know, your risk profile, etc. So if we were to kind of draw this out in a way, then you're gonna have sort of two, like, you know, a couple of different desires that you could possibly want to have, and you're gonna have to, you know, in many ways choose where you exist on this chart. You know, over at this end you've got risk, you know, and over here you've got like risk aversion, like, you know, or whatever. But then you've also got like like ultimately, you know, this is the difference between saying you can only lose a portion of your account versus you can lose all of your account, you know. So like that's that massive difference. And then you've got the other difference, which is that in isolated margin, especially when using high leverage, you're extremely likely to be liquidated and to lose your position, or to at least be stopped out, given that in the knowledge that your liquidation price is so close to you, then in order to avoid paying that 17% fee, where you might as well keep that money yourself. If it's the same difference at the end of the day, you can just stick your stop loss in, market stop out a penny above your liquidation, for instance, and at the very end of that, at least you're left with something better than nothing, and it's exactly the same difference by 1 penny. But it represents much more than 1 penny. It represents, maybe at this point, 3 pennies. Whatever is something. But you'll find yourself being knocked out of positions a lot more. Whereas with cross margin, then that's obviously not the case. But then you're left managing your own tolerance yourself, because if you're going to say that, oh, I want to ride this wave here and I want to have it at this leverage, etc., then you're mixing two things together. You're putting up more at risk in order to withstand the market movements themselves. So this is who you've got, like the natural that says natural oscillations. This says oscillations of the market. That says of the market. So you've got the market's going to move. The market's going to move itself. Or whatever. And you get to choose. Which point of this. Over here, whatever you want to be in terms of how you think about things. Right, Michael John Scott. Thank you so much for this coming up. Really do appreciate it. So there's another thing then that you might find interesting when you think about margin, and that's then in terms of the margin on your position, right? How does it actually work, right? Because this is the other thing that is not explained, as far as I'm aware. I've not seen anybody explain this in a format like this, for people that are new to trading. I mean, a lot of people who have been trading for years and years and years don't understand this at all. Partly because if you manage risk accordingly, then you probably won't be in a position where you really need to understand any of this necessarily. Thank you so much, Michael John Scott. Really do appreciate that. Massively do, really do. So you might not have had the occasion to understand this, so that's kind of lets those people off the hook, if you like. But also because these sorts of systems seem a little bit complicated, and for a lot of people they're not necessary to know. And then of course then the adopt risk management becomes like completely not necessary to know. And then if you're working in a building and somebody asks you a question, then often you're a bit too embarrassed to know the answer or whatever, so you get a bit like Johnny on the spot feeling, and then that sort of fear of that happening to somebody after a certain period of time makes it so they never even want to investigate the knowledge. They just cut it from their psyche, and numerous other reasons. But it's not that difficult a concept really when you think about it. So isolated margin here, your margin, like your leverage on that position essentially stays the same. In terms of your margin, let's call it your margin versus the borrowed margin, if you like, right? So it's not very hard to understand. Essentially, that stays the same. You open up a position at 10x. You've paid your margin up front. If you get liquidated, it's all kind of arranged in advance. You know the prices that it'll get stopped out at. That's managed through looking at what they have as a mark price, and then when that gets to a certain price, then it triggers a liquidation on your account, which then market sells your order and then takes the whatever recovered assets that are recovered from that sell and distributes them back to the people who lent you the money in the first place. Normally the liquidity pool that the exchange itself has. When things like BitMEX started, they used the funds that users would have. Then they found that it was far, extremely profitable to just, wash trade against people, and it was much then more better business case for them to have a fund themselves that they then managed against. So that's why the formula for funding on these exchanges a few years ago was a measure of the short demand versus the long demand literally in the market, and that function determined the rate that you would pay as a means of incentivizing and disincentivizing people from going on one side of the market versus the other. Whereas that's not the way it works anymore. Okay, instead the way it works is that the price that they measure as their index price is distance away from the mark price, be it positive or negative, over a period of time will then say that the prices are trading ahead of or behind, below the, or above or below or ahead of behind the their other sort of so-called objective price, in which case they can say there's just more demand out there, and that's what's pushing the prices up, therefore we're charging this interest rate. And you can see the distinct difference there in terms of the first off, you know, the transparency of it, and secondly in terms of the usability of that information. So while it still is in all, you know, more or less exactly the same as what it used to be, it isn't. And that's the bottom line, essentially. And that's how that's the distinction. Whereas with the scenario whereby you've opened up a position in your cross margin, right? So you're going from cross margin, and let's do it like on as if it was on Binance or something like that, and we're saying that you've also chosen your leverage, but you're also aware that suddenly you've chosen your leverage, but your entire account's at risk. How can that possibly be the case? You know, how can that be the case? So the situation here is that you're in a cross account, you've chosen your leverage, right? And we can do this. We'll talk this for more in a second. This episode's gone on for longer already, I think, than I had actually intended on. As well, if you look through the chat, you'll have said we keep things basic today. This is obviously, again, this is something that should feature in any educational material that I put out there, and has a distinctly different value proposition to essentially what I was meant to be doing here with TA on the channel for folks. So anyway, I still hope this helps people, right? So you've got cross leverage, and you've chosen your leverage essentially, right? In fact, let's just talk through that right now. Either you do that on Binance, for instance, or one of the other platforms out there that lets you choose your leverage on what is a cross position in advance, or you've done it in your head, whereby you said, right, I have X in my account, I'm going to use Y, which is some proportion of X, to open up this trade for Z amount of contracts, and I know that the margin that's required there is amounts to 5% of my entire account. Therefore, I know I'm using 20x leverage to open up this position. However, that's not presented to you up front. You know, the onus is on you as the operator here to actually know what you're doing. You know, and that's one of the things. That's one of the areas that these exchanges, all exchanges, in terms of when people say the markets are designed to take money from people, that's kind of one of the meanings of that phrase. Is that it's like, you know, caveat emptor. It was on you to figure that out beforehand. Anyway, then so you've chosen your leverage, right? But then it's gone against you. But then the position has gone into a loss, right? So whatever direction you've taken on the market, it's gone into a loss. Okay, so you started with what was, say, 20x. And then, thanks Dan Anthony, this is great. This is great. Let's see, can you make more money shorting than longing? I've heard a few people say that a few times. Yeah, okay. The briefest answer to that would be yeah. I'm not going to do one of these big breakdowns for that, right? Okay, just now, because we're going to move on with the show in a second here. But but yes, you can for a couple of reasons as well. There's the mathematics behind the situation, and I'll demonstrate that real quick. Okay, look, I'll give it, like, hold on a minute, right? Anyway, so you started with 20x, right? It went against you. The markets turned against you. I'll make it personal because that's how people think about things. Of course, it's not personal, but yeah, they did it to you. But and that means that actually, that because your position, so now your position requires more margin to be maintained than it did when you started, right? Especially relative to your deposited assets, which means that your leverage on that position, right, actually decreases. Okay, so to maintain it past the point at which you lost 100% of the value of your initial investment, your effective leverage value has been adjusted down. Essentially, that's how that works, right? And of course, I could talk about this, could go on and on and on, talk about this all day. I'll try and prevent myself. I mean, because as I was writing that out, I thought to myself, and there's something else I need to explain, and something else I need to explain. It's all very important, and I'm getting to the end of it, and I'm thinking, right, no, look, just cut, just. Let's move on, right? Somebody said, can you explain the difference? I think I've explained the difference more in this little chunk of the show here than is available out there in any resource available online. Okay, that's everything that you're likely to learn in the next 6 months of trading if you actually look at what you're doing when you use it on screen at the time. There's more to it than that. There's much more to it than that. I mean, for instance, if you want to get, like, for instance, if it says up to 100x, but the position goes in your favor and you opened it up with all of your account, then you have more margin in your account suddenly. No, not suddenly, just have more margin in your account, so can open up more of a position, meaning you've ended up with more than 100%, 100x leverage. Not initially, but and then when the market goes against you, it'll have to try and increase that. But of course, it won't be able to, because you won't have the margin left in your account. So then you'll get liquidated even quicker, which is one of these problems that can happen when people double down on positions once they've gone into their favor without really realizing that the level of risk that they're taking on isn't necessarily constant throughout the entire lifespan of that particular trade or that series of trades, etc. Anyway, look, you could talk about this all day. Let's not go on about it. Suffice it to say that we put a lot of information on there, and that's cool. So what we're doing here, has it actually turned around? Could we very easily continue down? Not out of the woods yet. Let's actually just do this. Let's try and get through this a bit quicker. I'll get back to what Dan Anthony was saying in a second. In fact, actually, no, wait. Dan Anthony said, can you make more money shorting than longing? Quick example here, right? Just quick example, and I can show you this dead easy. This might explain it for you. This might be the answer that you'd be looking for when you're looking for it. You shorted it here at the top on spot, right? You had $100 and you sold $100 worth of Ethereum at that price point there. Who cares what the number is? And then you got out down here. You made 36.89%. That means that move there in that short from there to there, right? From there to there got you $39 profit. Actually, it was closer to 40 in the end, right? That's what that got you. $39. Let's call it that. I think it was. What did I say? I hate auditing myself. I'm too scrupulous about what I say. It was closer to 37%. Sorry, not 39, 37. Right. So it needs to be accurate though. 37. So you got $37, right, roughly. Then somebody else took a position here from the lows to the highs, okay, and it went up $57, right? $57. This is the counterpoint, sorry, that I'm actually making right now. $57. It went up $57. It went up from here to here. Went up $57. It put in 100. I put $100 in. Put $100 in here. Put $100 in there. Put $100 in there, right? This one you shorted, this one you longed, okay, right? So you think to yourself, I'll make more money long in it than I would if I shorted it. That's what people think, okay? That's what you think is happening, because that's what the way that life has taught you. And this is one of these things that people talk about in terms of life teaches you things, but what life teaches you and how to be successful in life, and everything you've really learned about averages and percentages and probabilities and everything else, tells you one thing, and then you start trading and you discover that really actually it's kind of like all these other lessons, while they still hold true and the laws of physics and maths haven't changed, but none of them seemingly seem to apply anymore, and you need to think about what it's going to take to win slightly differently when it comes to actually trading, and that's because on the face of it you've made $36, or on the face of it you made 57, but what this is the easy convenience of saying $100 and using those as percentage figures. What I'm showing you is that for you to make the prices when they drop down will drop down in percentages that compared to how far do you need to see the prices move up in order to make that percentage. So so you can make I'm falling over myself trying to explain this. Essentially, all I was trying to say is that for you to make money with the markets going up and you trading with them going up, versus if you were to have lost money and you were trying to make that back in the same scenario, you need to see the prices for this person to beat this person. They need to see the prices move up 57%, you know, to get to that point. For this person to get to this point, they only needed the prices to go down 37%. So it's easier for that to happen in terms of percentage numbers, just purely looking at it from percentage basis point of view, than it is in terms of the other one. So the opportunity to short exists, right? So so that's the opportunity side of things. Then it's also in terms of like the underlying value asset. And if you're shorting and you're underlying that you're shorting it using it with is Bitcoin, for instance, and you're on BitMEX and you've deposited Bitcoin, you're shorting with Bitcoin, then you're also shorting against the underlying asset, you know. Whereas if you were using dollars, for instance, and you were shorting Bitcoin, then you're shorting against a stable asset, so that when you actually cashed out your money, then you know that's gone up. But look, no, there's so many different ways of looking at this. In terms of if something is $100, something's $100, and it drops 10. Then if you were shorting it, you'd have made 10, right? If it goes up 10, if you were longing, then you'd have made 10. So when people say that it's easier or you make more doing whatever, that what it really boils down to is the nuanced interpretations of like the differences between the relative values of things changing over time, and you know, and on the big picture, and how you can approach the markets as opposed to necessarily on terms of the literal dollar value of stuff. But there are more nuances to that. Okay, look, I did a bad job explaining that. I should probably make an episode sometime talking about it, because the question that you're really getting at, what they're really saying is something different to what I was saying there. I think really overall, really it was, and I'll admit that. But I'm kind of, you know, I guess my sort of my lecturing attention span is run dry. We could maybe come back to that again in later or something like that. I know that Tradespawn loves a short. Maybe he was talking to you in the chat then, since you asked that. I'm not sure, but really no, just the reason why people like longing things in general is because of the overall perception that if it goes up $10, that's better and that you've made money. That's one of the reasons why, you know, regardless of all the other stuff, they actually have the same belief that you'll make more going one way or the other. Ultimately, you don't really make more going one way or the other, really, necessarily. I mean, it's a relative thing, whatever, right? Right, cool, nice one. Let's just really quick do it episode styley with regards to the Ethereum price action. What did I want to say? Have things turned around yet? That was the idea. It has actually turned around. Could still very easily continue down, not out of the woods yet. That's the proposition. The reason for that is because we made it back up to the 50% area. Haven't cracked it yet. It's the same sort of, essentially it's the same mathematical basis for this in the Bitcoin chart, but I'm just presenting two different opinions essentially at the one time. One of them is that and there's a reason for it actually, but I'm not going to bother going into the reasons for it. One of them is that Bitcoin will kind of oscillate around and eventually make up to the 618, and one of them is that Ethereum could potentially go down here a little bit more, right, until it gets a bit more strength about it. at the minute, and the biggest point of distinction between those two is that you can see that the price action here with regards to the body currently, as opposed to the wick, it's below the 382 rather than above the 50% that we're seeing on Bitcoin right now, right? Incidentally, in terms of how that then flows out the way, as you can see, you've got this little bit of a sort of bear flag on the go with Ethereum, and if we see things continue down the way that, you know, or whatever, then maybe we see that kind of feed on into that as well, or else we see things turn around here. We've gone down past the 50% point here, so all of the arguments that you would make with regards to the that's the wrong Fibonacci that I'm looking at there. Yeah, just a second here to kind of so the recovery for the Ethereum versus Bitcoin hasn't happened yet, essentially, is what we're looking at. It's below the 236 over here, right? So right, so that's what we're doing. That's the explanation for everybody that that's the explanation for everybody. In fact, we'll just use this chart to do it on. I suppose it's cleaner-ish, kind of. The Ethereum prices are currently 1,500. I mean, it'd be wise if I did a little bit of research before I started the episode, wouldn't it? 1,582. We're up 6% on the day. That gives me something to say, doesn't it, for the folks back home? Right, everybody, for the folks back home, here we go, for the folks back home. If you're just joining me, by the way, drop a like, all that stuff, come back for more episodes. What I'm doing right now is making an episode which I cut out of the live, I publish it separately, I call it doing it for the folks back home. It's for everybody who's just not tuned into this live episode, right? That's what we're doing us here. Okay, cool, so hi friends, Ethereum prices are currently at $1,580. That puts us up 6.8% on the day. 6.19. I mean, what's the point? If I'm going to say it, I have to get it right. Hi friends, Ethereum prices are nearly $1,600. We're up over 6% on the day. Will we see the Ethereum prices continue on up the way and recover 50% of the move since we dropped down from the highs and start to look like we can continue towards the top side like we've seen with Bitcoin maybe perhaps currently? Or are we looking at a slightly different picture? Yes, well, maybe we could be. If I just bring on these drawings here, I'll show you all why in just a second, but I'll roll the intros first. Hi, so let's just take a look at this then. So we've dropped down here on the prices, and we can see that we did the same sort of thing over here in yon BTC chart, but there's a little distinct difference here when we bring the drawings back on, and we notice that we're above the 50% or thereabouts currently. It depends on, you know, exactly the time of filming. Actually, it's dropped down $500 since I made the episode for Bitcoin there a wee while ago, so we're just below it, but you get the point, right? Whereas with regards to the Ethereum prices, as you can see here, we are actually just below the 382 Fibonacci retracement point. That might actually be hard for you to see, sorry, I admit, but that's where we are. Let me just move this over. This episode's funny, isn't it? Right, okay, that's where we are right now at this 50%. We're what an embarrassment. Gonna make this one again. It's a bit easier to see. Let's draw in from that low. Right, okay, cool. Let's leave that off to the side so it doesn't need to feature on the show straight away. It doesn't line up perfectly, but it'll do great for where it is. Ethereum prices, they've gone up to $1,600 or thereabouts, and they're up over 6% on the day. Things coming up in this episode right now. Thanks for joining me. Hit that like button and that subscribe button. Come back for more of this. There's always good stuff to be seen here. Let's explain all in just a second. So, hi friends, as you can see below me there's a live chat text box. That's because this is during a live episode. Be sure to join us for a live stream someday so you can get your questions answered at the time. My name's Rocky.outcrop. This is Ethereum Technical Analysis. Thanks so much for joining me. You'll notice I've also got a video out for Bitcoin, Ethereum, this is Ethereum, Chainlink and Tezos today. Check out those on the channel as well and drop me a like on all of them. Great, anyway, we've seen the prices drop down the way recently in terms of the Bitcoin and Ethereum and well, especially with those two main parts of the market. Consider, do I cut that bit out or just leave it in? We'll see. Anyway, yeah, we've seen the prices drop down. We've recovered a bit, but have we recovered enough? And that's the question. Over here on Bitcoin, when I just want to show you real quick the comparison point, that the price action for us has brought us up right to the 50% Fibonacci retracement from the highs down to the recent lows. Over here on Ethereum, while we've done great and everything, coming up and getting touch off that 50%, we're actually back down below the 382 at the minute. This is a big point of distinction between the two charts, because what this does is it means that if you draw the Fibonacci from the lows to the most recent highs, it puts the price action below the 236, meaning that we could still be looking for another further retracement on down the way towards the price action coming all the way down towards that sort of 1420 price point again. Now, in terms of the bigger picture, you know, since the low that we had before we rocketed up here in this most recent phase, as we encaptured that with this wedge on the go, that whole phase of the market, we've come down and we've done a golden pocket retrace, and we've now recovered a little bit. So that's really great to see, and that's really fantastic. Now that's what this is all about. Are we going to see things continue down a little bit more, or will they go up towards the top side? Well, we've done quite well so far. In terms of the lows that we've had over here, this could be conceivably hidden bullish divergence. So when we do start to see this recover enough, and I'm saying by going past the 1666 level, then we have the rocket fuel already on board to go up towards that 2000 level thereafter. However, it's the struggle between here and there where the risk on this one really lies. If you want to wait for confirmation on it before you kind of dive into trades, that's totally fine. If we drag on prices on down the way here, then of course there's other opportunities for shorting it too, which maybe be looking for. Right now, so long as the prices stay above 1470, I'm feeling pretty confident with the upside on this one. While we have to admit that so long as the prices are below 1581, you know, that's a little bit of a premature case to be made. However, that's your ups and downs, exactly how I'll be approaching this market over the next wee while. Be sure to drop me a like and a subscribe and all that good stuff, and come back and join these wonderful people. I love these people down here. These guys down here, guys and girls in this chat box, are my favorite people. Become one of them. I'll see you in the near future. Cool. Okay, cool. Why is YouTube not sending me notifications of you being live? Anyway, hi everyone, says Always Learning. Good to have you here, friend. Good to see you, Peter. How you doing? How are you doing, my friend? Love the title. Shame the SpaceX test flight was aboard. Yeah, that's why Elon couldn't make it to the video. Elon couldn't make it because we're not going to the moon, and he was a bit embarrassed about that one. Michael Saylor couldn't make it because he looked at his name and realized he wasn't really an actual sailor, and he had to go back to dry land. And that guy called Raoul Paul, well, he decided not to come along because he sounds like he just decided not to come along. Maybe he wasn't willing to be there unless the other guys there. I don't know. Anyway, they all pulled out at the last minute. It's just us here. Oh, hey, how's it going? Nice to see you there, Jamesy boy. Good to have you here among us. For everybody who's curious, by the way, I'm just saying hi to my dad who's tuned into this episode. Hi, Dad. That's nice, isn't it? Yeah, great. So, nice stuff. We've done Ethereum now. Now look, if you forgive me, I'll try and not get too bogged down as we go through the next couple of them, right? So let's get this job done overall. Golden Pocket got hit here perfectly. We're waiting for the markets to process our new reality. I wrote that in before starting the show, as we can see actually here, since I even wrote that in like an hour or two ago, that in fact that's been precisely the case. It's nice to see. It's nice to see, I suppose. Hit the auto here. Yeah, you know, we've come up here here towards the 618 golden pocket. Fan dabby dozy, we hit that. We're now, you know, that's 6.5 there. We actually made it all the way into the golden pocket, back down outside of it. We're waiting for the markets to process our new reality on this one. The fact of the matter is that I could try and provide everybody all the time, every single day, every single minute with the exact way to trade everything every single time, and to be honest, I've struggled with that. I've struggled with that throughout my YouTube career. I have to say that we've really done more than enough. God, that music. Hold on a second. That's what I'm using here in the background, but if you're wondering. It's a bit loud for me. Just going to turn that down a bit. That might be a bit low on your thing though now. Whatever. Yeah, you know, look, sometimes, you know, you just got to take a step back and say that you've done everything, right? You've done everything. You brought people to where it is right now, and that's fair, right? Now, for me I have to, like, what's happening right now is that I want to make the distinction between over trading and being wise in markets, right? You get the impression if you're just tuning into random people doing videos all the time that you should always be active in the markets, and this kind of goes back to what we talked with Dude Man's question earlier on. Well, you know, sometimes it's actually advisable. I'm not a financial advisor, and none of this is financial advice. Always do your own research, but sometimes it is advisable to say to people, look, you know, you've done really, really well. Okay, really well. Okay, you can take a second to just let the markets figure out what they're going on. Now, what you maybe don't realize actually is that when you're trading, that's what's happening all the time. You know, when you're thinking, oh hey, this move was going to be the best move, why is nobody with me on it? Why is nobody with me on this move? So often it's because the markets are just saying, look, you know, we did fan dabby dozy, we got to where we needed to go, and then you'll let the other people kind of choose where the prices are going next for a little while. And that's what you see when you see that of little bitty bits of trading. The volume kicks back in, people take profits. You know, once they've taken profits, they've not immediately bought it back up. Well, they kind of did here. You know, it's not, you know, you're just waiting to see. That's the headline on today's Chainlink episode for you, you know, in the face of what we've already done, right? Because what we've already done was got us to this point. Now, if you're just joining this channel from a new source and you've never seen anything today, and as well for everybody watching along who's very familiar with the channels, you absolutely can go in, do your TA all over afresh, take it a start. It doesn't matter. You can do it immediately at the end of it when you close out a position, or you can do it whenever you want. Doesn't actually really matter. The markets don't really care about you as an individual at all. Okay, so let's do that then. Let's pretend like we haven't over traded this one massively, right? Because that's what, let's be honest, like, even with me doing the episodes every you know, couple of days instead of doing them every day of the week like when I started off the channel, you know, we've done what you have. Sometimes you have to just acknowledge, if you're always like, you know, biting your nails down to the nail beds looking for that next trade, that next position, then there's a little bit of the old junkie aspect to that, the little sort of like addiction on the go there, and you're looking to gamble, you know, at that point. So I just wanted to acknowledge that, and to say that, you know, after a year of doing these things where, you know, I don't know what the hit rate is in the videos that we put out, even when I'm trying to be just having a laugh and not really caring what I say or whatever, if that happens very, very, very rarely, then it's good, right? Now that sounds like I'm blowing smoke up my own bum. I suppose in a sense I am, but I'm not wanting to. Okay, I want to let me underline this, triple underline it, that every so often it's okay to just say, look, you know, I'm satisfied with what's happened. I'm going to just let the markets play out. Anyway, with that being said, let's talk about this as if we haven't already got to the point where we, you know, like taking profit here at this price point was a definite for everybody that watches the show, and it happened, and now we have to talk about it, about where the markets would be going, and ignore the fact that we talked about this and that definite thing happened, as if this isn't just us having just, you know, closed out our trades on that one, right? because the reality is it can go on, it can keep going on. We all know this, we all know it, it's all fine, we've done it, we know everything, but you know, we know everything we need to know. This isn't even drawn in properly, this goddamn thing, but you know, we've got everything, we've done everything, but let's pretend like it isn't. So in order to do so, we need to kind of choose. So let's just do some real quick TA on this one. This is a 15-minute time frame, by the way, on this chart. So I think it's fair to say that all of the stuff that I've already said about the broader term perspective still remains true on this one. But I can at least give everybody a sort of like a casual sort of risk assessment area, and then talk about the next targets. Now these are the next targets as is thing. If you've still got some of your trades on, then that's cool, this is where you're looking to, etc, etc, etc. I'm not, that's fine. Let me be clear about, I think I was pretty clear about what I was saying, really, and if it wasn't, well then ask me and I'll clarify it. But yeah, we're all good here, right? Let's just make that look like that instead. Let's just make this look a little bit better. Okay, let's make it look like that, right? Chainlink prices have been doing exactly what we wanted to see them doing, and they continue to do that. We're looking up to our targets up there in the $30 area. The price of Chainlink right now coming in at $29 per link. Actually, sorry, that's wrong. $30 per link. Way. Well, we're still looking up. We're still looking up, up, and beyond. The next targets that we've got in mind, if we do push on past the current areas, come in there about that $33 area, you know, and then afterwards we're looking up towards our previous all-time high at 37. So that's still more than 27% or 20% left on the table for you. We have our big target on Chainlink up there at the 1618 Fibonacci retracement point at $46.97. Let's just call it 40. We'll say 46 because we always take our profits just before the target, but we'll round up $47 ish target, right? But where we are right now leaves a little bit to be desired. Okay, so we're doing okay. If so long as we stay above this orange line here, this red serrated line, then the prices are absolutely fantastic. So staying above $29.42 where I've drawn this in at $29.40, $29, right? Just staying above $29 is what we want to see happen with this one for us to be able to go on up there. What am I talking about when I say that? I know some people find it confusing when I say that. Well, I'm saying that essentially if you were to be doing something like this, now this is not what I recommend, right? But this would be kind of how you'd be thinking about that. For instance, if you were like looking for a trade, you maybe be thinking, well, I'll stop out if we go below that area, for instance. Now I still think that we'll probably come back in here and actually test that, so that isn't the ideal trade to be had right here right now necessarily, what I just through on the screen there now, but I'm trying to explain to you what it means when I say certain things. I know some people find that it's not beginner friendly, my TA, and it's expert level, but really, you know, it can be if you learn the lingo. So like, there you go, that's what that's all about. And that's the same as saying as well that we want to see the prices staying above the 50% Fibonacci retracement area, and that's absolutely fair. You know, after this big drop down to where we had, breaking out of that wedge, coming in, doing the full measured move, having retraces down the way after having done a measured move, and people taking profit at the golden pocket, all perfectly natural. Let's just hope that the prices don't drop down too much to the point where we start to say, hey, look, that's a little bit worrying. And how that would happen would be a movement between the golden pocket and the 50% zone, which is also representing a 236 Fibonacci retracement point, and that's visible, you know, when I draw this Fibonacci retracement here. You see it lines up with that red line that I drew in already. Did that in advance for y'all, and we're looking here and saying that if we did drop down the way past that, then the next good best entry price for a trade at this point, with the overall idea of a continuation towards the top side before ultimately taking out those higher targets, would be somewhere between $25 and $26. Now that isn't necessarily going to happen That's just speculative stuff. What I can say is that some profit taking has happened here at the golden pocket zone, and then what we want to see happen is for the necessary support to come in here if we need it to happen at these zones for us, and then we can crack on up the way. This is indeed the 15-minute time frame I've done all this TA on. Why am I doing that? Well, because the bigger term story is still absolutely the same, and what it boils down to is that we have got the golden pocket perfectly. We're waiting for the markets to process our new reality, and that is going to be what we're seeing on the bigger time frames. And of course, like I said, we have that target up there at that 1618. That would be a good one to see. The reason we came down here in the first place was after failure and breaking back down from the wedge, doing that full measured move off of this wedge that we had, the yellow one over here, and then we've now moved up the way. So market structure is still in place, but it actually actually means that we really need to see the prices move above 33 and take out this key area here for having a chance at those higher targets, as you can see on the bigger time frames. Okay, so that's the full story told to you from the perspective of one time frame to another. Hit that like button, that subscribe button, come back, join me here. Look down there, you see what that is? That's a live chat box. That's everybody that's part of this live stream I'm doing right now. Be a part of one of these sometime. You know, it's great. You get all this great educational stuff, and as well, you're part of a really friendly community. I swear to goodness, everybody in there is an absolute saint. Love you all. Yeah, anyway, it's true, I do there. The golden rule: plan your entry and let the market do what it must do. It normally comes back to you. Patience, confidence in your entry, and plan is the key. There you go, Peter. Absolutely fantastic tidbit of advice. That is absolutely spot on. Do I have a note written on here, one of these already? I think I would have done the same thing for Tezos as I was looking around the charts earlier on, trying to think how am I going to make it so that doing the live stream later on is somewhat less stressful. Because, you know, by the way, guys, what I'm doing here is a live stream. That's hard, right? It's hard, okay? I'm trying to be entertaining. Phew, that's hard, right? I'm trying to be accurate and informative and educational at the same time. Education and and entertainment in the same thing. Chocolate coated broccoli, did you say? Oh, I'd like some chocolate coated broccoli, right? So I'm trying to present chocolate coated broccoli to an audience of highly discerning individuals who can smell BS a mile away and at the same time deliver the best technical analysis on the internet. Yes, this job, by the way, does cause a little bit of the old, you know, this is hard work, ladies and gentlemen. Okay, it's hard work. So when I was looking through the charts earlier on, I thought to myself, it wouldn't be too bad a thing if I put a couple of notes on. Do you know what ended up happening? Because I had those notes on the screen, then when somebody asked me a couple of questions earlier on, like Dude Man, Dan Anthony, etc., I was able to take some time out to answer them in a really hopefully fingers crossed, hopefully educational way to help with people who are new to the markets. Now, without these wee notes here, probably wouldn't have had the sort of the reserve energy in my batteries to say, it's cool, Captain, we can power through. So anyway, this is where we are right now. We're asking the same question, right? What am I saying there? The view looks good from up here at the top of fake out territory. Okay, that was what it was. Let me just jump down to the 50-minute time frame, hit the auto button, bring it in here, and say to people on this is the house of cards, the structural engineering around our chart. Now, when people talk about market structure, by the way, it's kind of funny. I mean, this does look a little bit like some sort of structural drawing, I suppose, of some sort, with the red lines connect, you know, showing you like how these things all kind of tie together. This red line here being a measured move off the back of this, you know, and where that would take us to, you know, so in terms of understanding, because people want to understand market structure, etc., that's a nice little image for people, in my opinion, just there. Anyhow, what we're looking at is that the prices have come up what could have been, you know, arguably towards fake out territory at 395 area. Do you remember 395? We did speak about it quite a few times in the past. 395, for instance, you might remember it from over here on the, oh, my thing's covering up the date, over here on what was that, Valentine's Day? Yes, Valentine's Day, February the 15th, the day after Valentine's Day, but the Valentine's Day drop off that we saw in 2021. Interesting stuff that we're repeating. Does history repeat itself? Will we see something bad happen come February the 13th? Well, these are the questions that we'll have to answer. I suppose when the time comes, but that's where we are right now. So we've came up towards the top of where we could fake out territory be. That's the 382 Fibonacci retracement point. Yes, we moved past the 236. Yes, we came outside of this potential pattern here. Yes, it could be viewed in a number of different ways. I mean, far be it from me to say that it was definitely one and not t'other, when it could have been something more along these sorts of lines over here. You know, fine, whatever. I'm not going to debate that. All that's really happened so far though is that we've come back down towards this area and essentially given it this retest for having moved outside of it, but we've not gone on and done full measured moves off the back of this information quite yet. Are we going to be able to do so or not? Well, the view certainly looks good from up here at the top of fake out territory. Yes, I think we can still absolutely go on and do it. But let's remember that what we're looking at in terms of this view is, of course, at the very, very top window of our house of cards at any given time. We're not actually looking at this from, you know, out the window of our rocket, looking at the earth slowly fading to the size of a marble beneath our very perspectives. No, in fact, what we're doing here is we're standing at the top of a sketchy house of cards and saying, yes, it certainly looks good. And I'm willing to say that we're going to go up towards the top side from here. However, I will hesitate with a little bit of mention, some caution, to say that coming back down and retesting off the 50% point here would, of course, be understandable if that had to happen, because looking over here, that's where the 236 is as well, and looking down here, if we were to not consider that to have been a retest as it stands, but how I'd drawn it in more like how I drew it in originally in terms of the top area, then a retest of that would actually come back down at these zones over here. Now, of course, that's all fair enough, all of those figures being above 360, making everything from the majority of what you would have done had you not been buying exclusively the tops at this point here very much in profit, and you should be able to sustain any moves against you in terms of your trading with regards to this one if there is a drawback down to that price point. Now, will we find support at that area or not? A lot remains to be seen with regards to that. You know, there's a lot remains to be seen. Now, we could have had this sort of, if you like, hidden bullish divergence type play out towards the top side here so far, and that be enough to have given us what we see here as this cross on the ADX. But let's bear in mind that over here in the 4-hour time frame, it's still in chop territory. Okay, so things are looking good. Absolutely, very, very, very nice from up here at the top of our house of cards fake out view territory for us. Now, in the 24-hour time frame, the reason why we can talk like this is because we have to acknowledge that we're still in this area. Now, the ADX at this point today has come down to the 30 line, this green line in the background, which is one of the ones we talk about an awful lot. If you want to get access to these customized and improved indicators, then there's a link in the description down below for them. They're free, or you can donate if you would prefer to do that, which I would prefer if you did, but absolutely no pressure on you to do so. But anyway, you can get that there, and you can see we're at the 30 point. Now, this turns around from here, very, very, very good for the shorties, but for the longies, not so much, you know. But we're at the point here where it's pushing down it. We want to see that drop below 30. That's always good to see that happen when you're looking to see the start of the trend changing. But you know, and seeing this in here in the 4-hour and chop, that makes a degree of sense. So what are we looking at here in the 12-hour, right between those two views? Well, this is the classic thing that we talk about on the channel here, talking about Rick and Morty lips. Well, there's been a little cross here. So far, we see that the ADX and the DMI are running in parallel to each other as we go through a phase of kind of thing, you know, just a little phase as we go through a little phase. Let me just bring this up a bit bigger so we can talk about this just for a second. As you can see, obviously the calculations in these things, whoops, where was that at? Roughly there, that'll do. The calculations in these things to get these zones are to get the lines. The maths behind these lines, they're just showing you that in this little area where these two are running parallel to each other, post this little cross, you know, or post a kiss, or if it was coming into kiss, or, you know, right at an area where you're thinking about stuff, that perhaps that's a little area of inflection for us. You know, that's perhaps what that is, and perhaps this will then present in some way on the price action up above in a format that makes us think, hey, you know, are we doing A or are we doing B? It's hard to quite tell just yet. We're just at that point. But what we have got is, of course, the positive story to say that we could see these cross if it does that, and it has just crossed, you know. And that's what the whole point is, that we've just got here to this point at the top where we're looking at the view, appreciating the view, saying, look at the skies, oh Celeste, my lovely Celeste, this celestial appearance is the best. For those of you who know anybody called Celeste, that is happening right here. Well, below our feet is, of course, a ravenous lava pit filled snake hound rabid zone of potential disaster, right? And that's the way that's the way that it is always in trading, right? When's it not like that, Rocky? Yeah, fair enough. But that's where we are just now. Okay, so what do you want from me at this point? You want me to be the guy that can suddenly say that predicting the future is possible? No, sorry, predicting the future isn't possible, right? It just isn't possible, okay? And I know that of all the people you watch on YouTube, perhaps I'm right up there as being the ones that looks like I do predict the future all the gosh darn time, but that's not actually true, okay? And these other ones then that say that they do predict the future and that's what technical analysis is for, and even the textbooks basically say that as well themselves, they're kind of pulling your leg a little bit, right? They're pulling your leg just a little bit, right? Because you can't actually see the future, right? And I'm here to tell you that. So when you're looking at the charts yourself and you're thinking to yourself, oh my gosh, darn it, how am I supposed to operate in this world? Maybe if I learn some more, maybe if I watch more of these videos, etc., then I'll be able to predict the future too. No, what you have to actually do is become comfortable living in a world of uncertainty. One of the ways that you can become comfortable living in a world of uncertainty is to join the Discord, right? Join the Discord and be surrounded by a bunch of people who are doing the same sort of thing as you, who all understand that there's no way of predicting the future. That yeah, sure, Rocky makes it look like you do in every episode, almost without fail, is almost laughable, but that's not, and he'll tell you himself, he'd be the first to tell you that you can't actually predict the future. And I really wanted to bring that out here today at the point where I'm showing you that there is this potential problem in the market. Now, I'm pretty much the only one who does technical analysis for Tezos on a reliable, consistent basis. I'm also fully I'm pretty sure that my technical analysis is among the better chunk of it out there in the world. Not the best. I'm not perfect at what I do here by any means, any stretch of the imagination, but I'm pretty sure that I'm delivering decent content. So okay, boo-hoo, I'm not telling you exactly where the prices are going to right now, right here in this episode, but I'm bringing you something I think that will actually give you real value for your trading, okay? So if you want to hit like and subscribe and come back for some more, that's good. If not, that's okay. Don't worry about it. Then, right, what you do is you jump over to main, you wait for a couple of seconds, and then you say, right, cool, so you made it through that point and you stuck with it, with the show. I really do appreciate people, by the way, who watch all of the show, you know, who don't just tune in for the little shinies and watch all of it, because there's usually something decent in there. Let's do some of that TA now. Let's do some of that predicting the future stuff now that all of the folk who got told all what they needed to hear, let's face it, like the Oracle and Neo and all the rest of it, told them what they needed to hear. Let's now do a little bit of the other stuff, okay? So this is it's actually looking all right over here. We have the potential for this hidden bullish divergence play to still be on for us. We haven't got the full measure move quite yet, but that's all right. We're on the way to it. If we do need to have a retest and everything we spoke about, okay, that's fine so far. We've just come up above the neutral line here in the 12-hour time frame on the RSI, and I'm liking the look of this. I'm liking the look of how we've just got this cross, and it's just starting to happen for us. It's not quite fully there yet. I kind of want to wish I still had my stochastics on the chart just here, so I could talk about that for a split second here. So I'm going to just pop that back on. Yeah, so you can see, you know, we're on the way up now. Of course, this is just getting that little look where it could. Oh wait, let me just choose. I'll just choose my exponential one instead of the. It's getting that look here, obviously, where the angle, you know, this extreme up has then taken a little sort of dent on it. Okay, but we're still pointing up the way here, and that's the 12-hour time frame. The 24-hour time frame, we've just kind of started that actually here in the stochastics. Weekly time frame, yes, okay, not good. The recent pullback. This is actually the sort of the 560 down the way pullback. What we really want to see happen here in terms of the bullishness is for us to get a turnaround here. Wouldn't it be nice if we could translate those lower time frame things up towards the larger ones? Now, when you get back down the way, then it is here at the 4-hour time frame that you start to get that slight difference. Now, are we going to have to experience some chop? Essentially, are we going to have to experience this play out a little bit, but hopefully push us towards the top side overall, so that the 12-hour one will become real and that we'll actually see the real the 24-hour cross be real? I think maybe we will. So that's my trip trepidation with saying that we're exactly, you know, we're on the way now. Nevertheless, though, there is the opportunity to take trades right from this area, you know, basing your risk in it around about the 380 zone and trying to carry it up the way. The next target is going to be, you know, $4.30. Let's call it 420, because, you know, take out 420 if you want to get high. That's what we'll say about that one. So 420, that's just shy of 430, right? And that's probably a decent enough target to look to, and that's what I would be targeting off the back of this one if I was trading this right here, you know, right now. And the way that I would manage my trades then as a result of that would be that along these sorts of a lines just here. As you can see, very easy to pick up a 5-to-1, you know, very easy to pick up a 5-to-1 if that's what you're looking for in this zone. Now, as well, with regards to the movement down the way, I wouldn't be looking to try and carry this too far beyond that 236. So if I was trying to short it, would I short it from right this exact price point? Well, I'd prefer to take it perhaps from one of the zones that we're just at here, as if to say, you know, if we see something coming in. So what we're seeing on the to make it happen for us, so let me just remove that real quick, drop down towards sort of 30-minute and say, you know, if we see something happen, well, I was going to say, if there's something, we can see that there's this little touch of the divergences just here, just a little touch of it, just saying to us, you know, maybe there's a bit of a pullback coming up for us here. That's not so great, actually. It's not there. I wouldn't want to take it off the back of that. Yeah, I wouldn't want to short this right now, but if I did, but I can feel that this is going up to try and at least test this 395 area again. Then I'd be shorting it from the 395s. I mean, we're at 387 at the minute, which is going to make all the difference in terms of managing your risk, in terms of being able to get a decent move on this one. So I'd probably go for another 5-to-1. You all watch the show, you all know what I think about things. That 5-to-1 is pretty decent, and what you're looking at over here is essentially saying that taking out our previous highs, pushing on past that zone, I don't want to be shorting it down from there. But if we do go down the way, I'm shorting this happily enough down towards 373, and I'm happy to take profit on a 5-to-1 risk to reward move off the back of that one. That's your TA. That's what the other folk didn't deserve. They needed the other lesson, I'm afraid. And so we did it. We delivered it to them. Right, okay, nice one. Yeah, totally. Bro, I wouldn't be here if you didn't have good TA, my dude. Yeah, thank you. Yes, always learning. Do you think because you're a crypto channel, the algorithm chokes your reach? Yes, I've spoken about this a few times in the past. Yeah, massively does. What do you think? What do y'all think? Should we take a big departure? What I do here is I teach people who are in the crypto world how to be successful, one person at a time. And there's something I recognize about crypto traders. You know, that special degen that exists inside all of you, where you want to make a difference in your life, you want to make a difference in your family's lives, and you want to do it in a way that people, you've been told your whole life by people who didn't care enough about you as an individual, that, you know, maybe you won't make it. You know, maybe you should get back to flipping those burgers because your crazy ideas about success are not for you, they're for somebody else. But then you chose to go into crypto. You thought that you could trade this and that you might actually be able to tell all the world, you know, just where to shove it. And I decided that, along with the fact that I proactively trade in not only crypto but forex and commodities and stocks and shares, so I do a fair bit, that you're my fam, you know, my fam, I get it, right? So I've done this. Should I just pivot the whole channel, take out the crypto words from it, and just directly target it at people who are trading stocks and shares? It's so much easier. I mean, it's so much easier. Have you seen the GME technical analysis that I've done recently? It's so much easier. In fact, what's the time right now? Let's just check in with how that closed. But yeah, mate, you're not wrong there. That's exactly what happens with the channel. I get massively limited. What? Sorry, no, not that. GME, like actual GME, please. Actual GME, please. Not crypto. Yes, there we go. Sorry. Whoops. $124. 15-minute time frame. Yeah, well, we nailed the TA yet again. Nailed it again. with this one. And how easy is this? How many days and days and that have you got to trade this thing? I mean, it's so easy, right? So when you're talking about so should I go over and talk to them? Do they deserve it as much as you? No, they're complaining about a market which is wildly easy to trade in comparison. They still don't appreciate technical analysis. You watch the stuff from the from what's out there, and it's so bad. Okay, it's such low quality stuff that even the people who are like great experts that have been at it for decades, they don't understand the markets, right? They just don't understand, right? They just don't get it. They don't understand. Like literally nobody that's doing any videos about GameStop right now, apart from TradeSpotting, honestly, apart from TradeSpotting, in my honest opinion, nobody understands the markets, even to a tiny little degree. It's to the point where it's laughable. So should I just go over there and take a part of that pie, you know, or should I continue trying to help the people who I think have got maybe something a little bit more about them? I mean, I really, like, the people who are interested in this are interested in it for a series of reasons that goes beyond just wanting to be a trader. Or should I just go and just target people who just want to be traders and that? The channel would grow much quicker. I'd still be doing the same stuff, you know, it'd still help people. Everything I've spoken about today would still help people, but I don't know. I don't know. I still can't believe there are people that benefit directly from you and don't even think to show that appreciation. I just think that you want to pivot the channel to be less of a niche, maybe. Lol, add GME to your title, you'll get a mass crowd. Sure, right, so there's 16 of us here right now, right? There's 16 of us here right now. I'm going to tune out in the not too massively different future. I've done all of the coins which I intended on doing when I came here. By the way, thanks so much to your comments, and it's good to see the likes of Navanethan out there as well. I didn't give you a shout out when I saw you popping in, but I was aware that you were here, my good friend. And stuff like that. So there's 16 of us here. Let's finish the show off talking about stonks, right? And I'll just change the title. I'll just change the title of the video. Let's do this together. Let's do this together. So this is my live stream. This is when you're doing a live stream. This is what it's like. You get to look at all the, you know, the layers and layers. In a couple of seconds, this box will start showing the box within the box within the box. How crazy is that? You can imagine then 30 seconds later, this box just up here is going to then have the box within the box within the box within the box. Oh, it's going to be so good. Anyway, yeah, let's edit this thing, right? That was a really funny title. I thought I laughed at that. But let's call it live GME, live GameStop TA. The GME short squeeze. Right. Okay, let's do that. Let's see if anybody tunes in. Let's just change this around. There's no tags there at the minute, so let's just add GameStop. Annoyingly, there was tags before I started the stream, but YouTube's really buggy with this stuff. Short squeeze. We'll do this together. Be a nice little experiment. See if anybody tunes in. GameStop short squeeze. GME. GME stock. GameStop stock. Whatever. Right, cool. So we've got some stuff in there. We're done, right? Sweet. So back over here, get up the GME charts. This is the GME chart up. Let's see how many folk join us for this. If anybody does, you know, if anybody does, who knows, you know, if this will have an impact. But you can see the current viewership. I've changed it to GameStop TA. There's apparently either 16 if you believe this number, or 17 if you believe this number, whatever. And 26 likes. So let's see. Can we get some more people to come through here? And I'll just take this tab off again so that I can see what you are all saying. You'd also attract a much wider crowd of people than you could have inner circle streams for the main community. Yeah, cool. Add very niche. Add takeoff is 21st to 21st of March. All right, okay. All right, cool. I'll go to other people. Man, look, don't do anything that would be subject to the rules of YouTube, right? I mean, it's good and everything. Don't do anything that that could potentially put your account at jeopardy, buddy. I don't want you to do anything that would break any rules or anything like that. I mean, I genuinely care about all yous. I just added that to the title, Jamie. Thanks. I genuinely care about yous. You know, I genuinely care about you. I don't want you losing your account. Okay. I want we need the channel to grow. But I'm not rushing it. And if it doesn't happen, it doesn't happen. Like, if it does happen and we get to the point where I'm able to keep doing these streams into 2022, then fantastic. Okay. And we've talked about that enough and everything else. Everybody already knows about it. So, you know, and I want to be doing it, and I want to for the genuine massive amount of appreciation I feel and friendship and warmth towards every single last one of you, and that's real. I'm not lying. But yeah, I still do want the channel to grow, obviously. Anyway, we better get on topic here, or else people will tune out, right? What really helps is just to mention Rocky to other streamers, saying he's good and suggesting a collab. Yeah, I could do a collab with anybody. I would be happy to do a collab with anybody. I'd love to have people on here who are willing to discuss things. I wouldn't want to do collabs, you know, like, oh hey, so when did you get into crypto? Oh right, yeah, so and what did you do? Oh blah blah blah. I don't find them interesting. But if somebody wants to come along here and be in the community, and this is a community that everybody is able to be themselves in, without exception, so you don't have to, if you're nerdy, you're nerdy. Be nerdy and we'll love you all the same. If you're a real degen trader, you can be a degen trader. We'll all love you just the same, or whatever. We're super supportive. I've just seen so much positivity in the community. Somebody comes along who wants to learn something or whatever, somebody else will take them by the hand and say, yes, let's run to the finish line together. So yeah, so if somebody wants to come in here and be a part of that, then I'd be so happy to do it. I could have anybody on here. I'd love to have a chit chat, for instance, with the likes of any of you, and with Eric Crown, Mitch Ray, Daniel from Chart Champions, that Martini guy. I think he's a great guy. Magic Internet Money, somebody who will give a shout out to the channel here from time to time. TradeSpawn has been on before, and I'll absolutely have him on the show again as well at some point soon. Probably, actually, it'd be good to have him on board for another episode soon. Tony, one of the Outcropticians, has been on the show. So yeah, but just to chat, we could have the chart up behind us. We could just chat about what it is, you know. So like, here's the GME chart. It's not going to change, right? Because the markets are closed. The chart's not going to change. What we could do is we could have somebody else come on and they could discuss with us, you know, what they're looking at and what they're thinking about, but also just like be themselves. I mean, when you tune into this show, you see me be myself, like, you know, to my own detriment, perhaps, whatever, but unfiltered, just me, and that's that. So if anybody was willing to come on the show and just tell us about like their likes, their interests, you know, did they grow up supporting a football team, or have they read any good books lately? Is there music that they get stuck in their head from time to time? Do they have a song stuck in their head today? What was their favorite last takeaway junk food? Just that, and have the charts up behind us and chat for a wee while and say, well, it was really good to meet you, I like knowing more about you, I respect your TA, I'll see you on the show sometime. I would do that. I'd be happy to do it. And like you say, would I be open to co-streaming? Yeah, sure, for sure, absolutely. Yeah, that's right. That's right. Are we getting any more viewers? Anyone else tuning in? 13 viewers. Damn it, we've lost 4. Oh, you see, that transition to crypto didn't help the video very much. Anyway, maybe I needed to be doing TA on this thing. Do I need to do TA? Maybe I need to be doing TA on this. When people tune in, you know, because they might tune in from time to time randomly or something, I need to be like in the middle of saying something about GameStop, right? So let's get on this. 15-minute time frame is not going to be very good for looking at that. So let's just spend a couple of minutes talking about how the RSI for GameStop has been doing really great here. You can see that we've gone down to this low here on the RSI around about 26, and then ever since then we've not actually come any lower. You can see here we're at 28, 29 or so. Then we came down again, only it came down to 32, came down again, only came down to 40. You can see this emerging, this overall upward support area on the RSI, which is really great to see. Why is that so great to see? Well, when you're seeing this upward support level forming on an oscillator down below, and you're looking at the price action having had a big drop down in the middle of that, then you can see that there's that in the face of what could be considered extreme bearishness, having followed on from a massive positive move, that there was an overall demand that existed within the market at key zones. And I suppose in a way this just underlines the importance of identifying that key zone. So what was it? What were we looking at when the prices were up here? Well, we were talking about the prices at around about 45 down to 35 ish as being that key zone where we would hope to see the prices turn around at, and by jingles did they do it. So in the run up to that, then we had this pattern on the charts, and that was this wedge, and of course that meant that we had a bullishly divergent RSI, and we had this bullish pattern on the charts, combined with the hidden bullish divergence right here on the MACD. Now, why they call it hidden and not visible is beyond me, because looking at this thing, the most obvious thing on there by about 10 trillion miles is this huge amount of negativity here on the MACD, which translated to an inability to take out any of our key market structural areas. There you go. Bullish divergence, right? And that's how it works. And then what did we see afterwards? We saw a massive rise up in the prices, but where did they go to? Fibonacci yet again coming in here to show us that it went up towards the golden pocket zone. Was that predictable? To an extent it was. What also happened is that we actually turned around mid-gap fill. Now, a big reason for that was because we went in and actually created a gap in pre-market, aftermarket trading, and we then pulled back down the way since then to fill in that gap. What happened when we filled in the gap? Oh my days, oh my lordy lord, right here at $91, and yeah, right there at $90 area, filled in that gap, and we then went on up the way since. Oh, wonderful stuff. That leaves us in a position right now where we do have a couple of things that we can look at which are not necessarily speaking for themselves right now. So this area here where we see the 50% Fibonacci retracement point, which is on this Fibonacci here, this area here, it's not necessarily doing that. It's not necessarily speaking for itself quite loudly enough. Let me just draw it in again so you can see here that the prices came up towards this 50% area here, but then retraced back down, and they're above the 236. So we're still in this bullish formation, but we have obviously been straddling between the 382 and the 236. So obviously when you see that happening, when you see it moving between two key areas in the support and resistance, you can just flip it over and say, well, obviously then that means that we're below the 236, or that we're challenging the 236 from the other way around. But as you can see here, that the day ended, so the last chunk of the day, what did it do, and was it a positive end to the day? Well, it certainly was. When it pushed up above, when the GME prices pushed up above $122.67, that was a hugely positive end to the day. It's taking out that 236, leaving us in a prime position to be really challenging towards the top side thereafter. Where the next big, where all eyes are looking at right now in terms of a zone on the prices, is actually right in here between that horizontal serrated yellow line and that flat, smooth serrated line there. Not serrated, linear line. How about that for a bit of redundant tautology? So yeah, and this is the zone to be looking to for our next one, and then beyond if we're able to actually crack that. Now this is obviously a big ask. It's a big ask, okay? It's a big ask, but we're still on to be able to do it. Where we really need to manage in our risk at, well, obviously there's that 236 we just spoke about at the 122 area or so, but there's this orange line here. $90 is really the key area for us. Now, let's face it, $90 from $130 or so, that is $125. That is a real big chunk, you know, a huge percentage move. In fact, if we're to take it from the current prices down towards that, you're talking about a 25% move to get to there from the current prices. So maybe there's something to be looked at in terms of the in terms of this little section just here, and talking about huge percentage moves. Where would we be able to go? Worth also acknowledging the built-in volatility that's in this market right now. It's worse than anything that you're seeing in crypto in terms of percentage moves or whatever that you're likely to come across, apart from the outliers. You know, so this is certainly one of the most interesting markets currently available to be traded in terms of just built-in interest into the charts, and you can see here. So that's really visible with that percentage move. But that's just the world that we're in here, given the structure of everything that we've seen, because these were far bigger moves in terms of percentages. So you're hamstrung in effect, that your bigger time frame analysis up here, you know, 4 hours plus, isn't going to divulge necessarily sufficient quantities of information about this little gap. It's not a gap, but this area of the chart over here. Just checking in with the viewership. Oh, 15 viewers. That means 2 people have tuned in because they saw it's about GME. Thank you so much, ladies and gents. Hit me a like, give me a like there if you want to, and tell your friends that we're currently in the world here trying to actually help people. Wait a minute. We've got somebody here from chat. I'm probably in the minority here, but I literally only tune in to see if you mention GME, since that's all I'm interested in. I do end up watching as long as possible though, because you provide so much value. Oh, that's so funny. Thank you so much, my friend. Thank you so much. What an endorsement that is. What an incredible endorsement that is. This guy tunes in. He ain't interested in Tezos. He ain't interested in Chainlink or any of that nonsense. He's here for GME and the like. Yeah, he stays to watch the other stuff because of the value. What an endorsement. Thank you so much. It's an incredible, wonderful, humbling experience to read stuff like that put out by people. I massively appreciate it. Hello there. David says, I'm long on GME, and pops in all the relevant emojis. That's quality. And we're also seeing, and always learning, drop a like if you're long on GME. Drop a like if you're long on GME. Drop a like if you're short on GME. Yeah, but yeah, totally. Drop a like if you're long on GME. Nice one. Welcome to people. Welcome to everybody. That's how I found this channel too, says Always Learning. Yeah. I'm just so grateful for you guys, right? Okay, cool. Wouldn't it be wonderful if one of these streams could really blow up one day, right? Wouldn't it be amazing? Yous are all in the chat box there. You're fully aware that I can read everything that you're saying. You know, it's all good. Chat away to me and I'll respond to what you're saying, and it's good stuff, right? But wouldn't it be amazing if we were doing videos and it was just flowing on by and it was impossible to look at? Wouldn't that be something? That's something in our future potentially for us, but I'm here to help individuals. I'm not really here for clickbait and everything else. So if you're an individual looking to learn, who's willing to have positive change happen in their life for the rest of their life, to learn a skill for life, they've come to the right place. I'm going to be the person that actually does deliver that for you and really delivers that positive change in your life. So fantastic, you've made it here. Really happy to be doing that. But it doesn't matter that you're not a million of yous. I'm still going to help you just as if you were a million of yous. Okay, it doesn't matter. I would love it if there was a million people here, but I'm going to help you just the same regardless. If we're looking for a movement down towards the $90 area, then we're going to have to say that there's a key area to stay above just now is this $109 area. Why? Well, because of the distance that we moved between the highs that we had over here at 185 down to the lows that we got down here at 85. So the big $100 that happened between here and there, leaves us in a position where if we drop down below this 236, then there's a distinct malaise in the market, and you would be looking down here and saying there's a possibility that we come down just to give us just to see. Now it's kind of like when you've got a loose tooth in your mouth and you know fine well, right? This is actually, now I'm thinking about it, I've not had this experience for decades, but right, you know fine well that your tooth is loose, but what happens is your tongue just rolls over there and pushes on it anyway, and then and that's what happened over here. You knew you had a loose tooth, but your tongue went up and it pushed on it anyway, right? Then the prices went up the way. Now if the prices drop down below 110, what that is the market's doing the same thing where it's just moving its tongue over. It knows fine well, right? It knows fine well that the tooth is loose, but it'll push it on it anyway, and that's what would happen with us coming back down here. So I would anticipate that at that point. Okay, so I would anticipate a move between 109 and somewhere in it around about 90 bucks. Now why I say 90 bucks is that my hope at that stage would be that in and around here we see green airplanes coming in and pushing the prices. You know, this is where we want to see takeoff happen from again if we push down the way. And like I say, the reasoning for that from a it's a metaphor. Okay, now the actual reasons for it, the numbers, you don't need to know, you're not interested, but in terms of the metaphor, I think that it's still loose feeling is real. Now occasionally on that, taking that metaphor and running with it, you know, towards the end, you know, when your tooth has been loose for like a week now and you've been at this 10 times an hour every day since, it gets to the point where eventually you just kind of keep on pushing, right? You just keep on pushing and you snap the remaining root or whatever and you let that tooth go. That happens. Now what we'd be looking for is at that area, can we sustain the prices? I want to see them sustain the prices. If they don't, then there are actually 3 targets further on down that we would be looking to at that stage, and that is 65 bucks. Now 65 bucks seemed like a good distance away back then when the prices were over here at 35 to $45, right? But I would still be looking back down to that 65 buck area. Why? Well, because actually anywhere between 65 and 45 at this point represents a higher low, which means that we're still on to be able to benefit from the hidden bullish divergence we're seeing in the charts, and structurally we're still fine overall, but it becomes very, very worrying. The main reason for it becoming so worrying at that point is because you'd have a high, a low, and a lower high, and you'd be coming in to look and trying for a lower low. And just in terms of like chart patterns, going up here to the empty space and bringing up the brush tool, if you've got a high, right, then you've got a low, and then you've got a lower high, and then you come on down the way. At this stage here, you know, just simply if you were doing chart patterns, you'd say you've got a bottom line in here, you've got a top one here, this would be a descending triangle, which statistically look like I'd have the chances to break towards the downside, which means that if we did actually, if we go below $110 and then subsequently drop down to $90 there afterwards, you know, that's a significant percentage change. You're talking 20% move there, like more than what most people look for in their entire year's trading. So you've got a lot there, and then actually do find support. That's when it becomes mission critical to get past wherever this point would be in the charts. Now where would that point be? And actually it is currently already visible for us where that point would be at, or where that point would be at that stage is right here. Alright, so you're looking $147 to $150 would be the next point, at which case if you were looking to short it, and by this stage I think it's probably fair enough to acknowledge that people do short things in the world, then you'd be looking for your red jet planes to come in at that point there. Okay, that's where you'd be looking to in the next wee while, and that's how we're going to be able to manage this going forward. So if there's a drop off of less than 10%, well, 10%, you can tolerate 10%. Like, this is it, you can tolerate a 10% move towards the downside. If it does that, you might as well then just kind of back out and look to try and get in at a subsequent further 10 to 20% move down the way, or indeed hold off and just wait and see how the markets goes, or indeed dollar cost average into your position, or indeed do whatever you want, because I'm not a financial advisor and none of this is financial advice. Indeed, if we drop down to those areas, we're not looking for it to just drop down there and then suddenly panic. What you're looking for is to drop down there and spend a portion of the trading day. Now, what if you're in cryptocurrency, you'd be talking about it and saying a series of 4-hour candles, because, you know, there's no ends to the days there. But what I'm talking about is that we're looking to see it spend a portion of the trading day below there. So if we drop down to 110 by lunchtime, that's not, you know, the end of the world. But if we still haven't recovered over 111, say, by close of day, then I would start to feel a little bit shakier on things, if you kind of catch my drift on that one. That's what we're looking at with regards to this. So let me just check in with the chat and everything and see how everyone's getting on. So how many viewers? We've got 13 viewers. Right, that's it, I'm afraid, really, overall. I'm going to be tuning out soon. Okay, so it was a lovely little experiment that we ran soon, not right this second, soon. A lovely little experiment that we ran. Didn't work, unfortunately. Viewership was significantly higher, nearly 50% higher, more than 50% above where we are now. Okay. Okay, so let me just catch up with the chat here, because I see there's a little bit of chat in here, and I want to chat. I want to see the chat. I want to chat with the chat, and then I want to say cheerio to the chat, I suppose, and all the rest of it, and keep everything going. If anybody's got questions or whatever, then feel free to ask them now. This is the time to do it, because if you don't, then you're missing your chance to do it. You probably do have some questions out there or whatever. If not, that's cool, because it lets me get off earlier and all the rest of it. Don't worry about it. Yeah, Dominic's, you're doing well. David, you're doing well. And that being here, thanks so much for joining me. Next up, $135 tomorrow. Well, that is it. Like, sorry, did I not make sense? Next up, $135 tomorrow. Check it out. Whether it's coincidence or not, that's this guy. He's looking towards the 50%. For people who don't know what that guy's doing, is actually called Dow Theory. And if you want to look that up, then go ahead. By the way, David, what you've just said is Dow Theory. So Dow Theory would take us up to that point, right? That's what you've just said. That's one of the key components of it. Well done to you. If you're new to trading, then well done. You've just discovered Dow Theory, and that's 135. Now, Fibonacci, sort of just general Fibonacci theory, you know, general Fibonacci. That next one sounds like an actual general from the army. General Fibonacci theory would say that we've probably got a pretty good solid chance of coming up towards this zone thereafter, right? And where we are right now, by the way, in terms of both of these things, is that there's a 70% chance of 70 is maybe the wrong number at this point. Well, let's just go with 70% chance of at least one of these two outcomes. Okay, this is where we are right now with things. So if you're wanting to know where the market is right now with regards to GME, that's where it is right now. You got 70% chance of at least one of these two outcomes occurring. General Fibonacci theory. That's one of the two things. And then you've got Dow Theory just as a general thing for you. Oops. Okay, so that'll help some people. Now, will it help everybody? No, not necessarily. Could it possibly help some people who are looking to learn and everything else? Yeah, I would say it could. And I'm pleased to have had the opportunity to do that. Now I'm going to catch up with the chat and see what you are saying, and then I'm going to eventually start to get around to the point of wrapping up. It's worth to mention that this is only about the gamma squeeze, not the MOAS itself yet. And you're a big part of the community, Navigation. Yeah, that's true. Oh, yes, you are. Yes, Dominic, thanks for that. It's worth mentioning this is only about the gamma squeeze. Right now, in terms of the gamma squeeze, this is the TA, regardless of the gamma squeeze. Let me just also be clear on this, that my personal position, if you put a gun to my head and you said I had to say an answer, I don't give a shit about fundamentals. Now, the truth is that it's more like 80-20 rule, 80-20 rule, that is 80% are going to be looking at the charts, 20% looking at fundamentals. I think that people who think that it's the other way around are grossly misleading people. And we see it every sort of Keynesian economic cycle when, their so-called belief about it being 80% fundamentals then gets completely ravaged, and we saw that 2008. We've seen it last year, and we'll see it numerous times again in the not too distant future. I assure you, it's just the way the world works. But anyway, that's my take on it. And when you're looking at things like that, I mean, that's kind of like a fundamental type thing. Now, it's not strictly speaking, it's in that kind of grey space between fundamentals and technicals, because you're looking at essentially prices and then the amounts of volume and stuff like that, and you're looking at indicators and things to kind of come up with these assessments. So you're in the in between worlds, and I appreciate that point of view. So it's worth mentioning. This is about the gamma squeeze, but how would that happen? Well, it's going to happen with these technicals, or else it ain't. And really anything that's beyond that is unactionable. Is going to make about as big a difference in your life as going away off and reading Peter Pan again for a while. Roughly, I mean, it's going to be a bit better than it, but closer to that. Retesting the support is a buying opportunity. Yeah. Is the amount of disinformation with fib trend extensions is astonishing. Yeah, absolutely. Do you have a fractals video inbound? No. I was going to talk about Engine today. Didn't bother about that. Let's take a quick look at Engine, by the way. But I want to read the rest of the chat. Yeah. Yep. Chart does not have feeling. Yeah. Project Nucleus, nice to have you here, friend. I must admit, I was doing a bit of work and watching in the background. I love your accent. I don't know what I did today. I seem to have made about $3,000, so all good. Oh, excellent. What are you trading there, Project Nucleus? Love to know it. By the way, I'm not actually from Glasgow, but that's, the fact that you were within 55 miles from my front door, I'm going to give you a big thumbs up with that one. And yeah, let me know what you were trading. Well done. 3 grand. Excellent. Super happy for you. Super happy for you. You see, while I like Rocky, you see, while like, yeah, I'm a little bit confused by that, but that's because I'm reading out loud. Patience, Rocky bro, you got the skill, one day you'll blow up. Everybody be saying that to me, Swisher, man. Everybody's be saying that to me, and I am patient. I think I'm demonstrating the patience. I don't know, whatever. I mean, I say all of this and I got a big smile on my face, and I keep coming back for more, and I tell you how much I love you and everything else, and and then still some people pick up from time. This guy's complaining because he does, whatever. A million miles away from Mitch Ray yapping about not having 50,000 subscribers. I mean, come on, it's not the same at all. Anyway, unless Elon is pumping your investment, lol. Yeah, I saw that. You're chatting to each other. That's quality. Let's just take a quick look at Engine, by the way, because it did some things today. Over here, where did we get to? Ah, you fucker. It's funny. It's not actually that bad. It's just that when I said "ah, you fucker" there, sorry. What it was that I actually shorted this earlier on today, and I got stopped out of the short that I was in. Somewhere in and around, the top area. That's all good, that's fine, but I immediately decided that my stop was wrong on it, and then what happened is I went into it again, and yeah, I mean, and then I took profit. And where did I take profit at? I took profit at 122, I think. No, I took profit in 2 places. Oh, I traded this perfectly, but almost perfectly, right? I took profit at yeah, I shorted it here. This was just before doing the live stream. Wasn't like a big deal. And then and I took profit in at 115. I did 115, wasn't it? It's saying it didn't get down to 115. Was it just because it was on the futures that it got down to 115? Whatever. I took profit in at it was like 115.7. I had the profit taken thing in at, and 121 or 122 or something like that. In those 2 places, but I shorted it, and I must have opened my short like here. It wasn't like a massive trade or anything, it's just, and then I got stopped out of it here, and I thought, no, that's annoying, because I didn't really, because it was good trade, so I then re-entered it again here, and not at that point. I re-entered it again just here or something like that. Then I took profit just here, just in a little trade. Anyway, I made back most of what I lost in the stop, but what happened was I used 2 different amounts. So essentially, for argument's sake, for argument's sake, what happened was I shorted it with X. It went up. I was going to say some numbers, but it doesn't matter. It went up. I then stopped out, so I was left with, you know, X minus whatever. The arrows mess up this stuff. I was left with less. Then I shorted it with a smaller sized amount. I shorted with a smaller sized amount, which is one of these things that happens. I mean, and looking, I mean, I know what happened is that I had this belief. I had belief here. My belief was broken because I'd made a mistake with regards to my stop. Then I got belief back, but I was affected. I was so affected. AFFECETED. Affected by what had happened in amongst this area that I actually didn't go in with the same trade as what I would have done before. I actually did it with like half as much or whatever. Then I took profit down there and I made back, you know, most of what I'd lost, but not all of it because I'd used a smaller amount because I was affected by what had happened beforehand. I mean, essentially what happened was that I didn't want to trade this thing. I opened it up. I saw that it was coming up here. I was thinking, this is an ideal shorting opportunity for me right here, right now. And and then I didn't. I hadn't done the TA properly on it, is essentially the easiest explanation for it. And because I hadn't taken the time to properly do the TA on it, then you can see that that I'd messed it. So essentially what I was thinking was that I'll short it. I want to short it. This is perfect. We were coming up towards the 414. I'll take a short anywhere in this zone, please. Thank you very much. And I'll stop out if we're actually going on past this zone because I've only done the briefest of TA on it and whatever else. And he poked her heads up, poked her heads just above it, and then sank back down again there afterwards. So I stopped out of a trade there by being sort of too strict on myself. I was like, I'm just taking this off the fly. Oh, well, I'm going to be stricter on myself than I normally am. Oh, I stopped out. Oh, I lost a little bit of my capital because of that stop. No big deal. Who cares? It was only you know. But actually, what I did was I shorted it with initially I was too enthusiastic at the start, and I went with a bigger position than I normally would. So my position size is normally X. I went with X fucking cubed size position on that one, and then and then afterwards I was like, what are you doing? What are you doing? Why did you just do that? So then I went back to just trading it with like my regular position size. Whatever. Anyway, this thing, great. Confounding expectations completely. The rise up here, yeah, nobody knew where it would go. Stopped at the 4.414. How many times have we seen that happen, ladies and gentlemen, on the channel? How many times? And then we retraced back down the way. That's not the end of the story. We also had, in terms of the low-term time frame charts, that we just kept going up, you know, on this this 8-period exponential moving average, came back down, pushed down below it, came up above it again. At this point here, if we see these two cross, then maybe we'll get some sort of like push on down the way again, and maybe a second shorting opportunity. It was like the chances of us coming in here, and at the very least at some point along the way, testing off of one of these lower moving averages. I use these atomic numbers. I have done for a wee while here. The atomic numbers are, by the way, 8, 18, 36, 54. They're the atomic covalent bond numbers, by the way, and that's what we have here. So if we'd seen these turning over, then I would have adjusted my. If we'd see these turn over, then maybe they would get a second one, but we haven't, you know. So we might be wondering as well, how come you shorted it up from up there and you didn't take profit? You took profit down here, right at this moving average and at these two lines, and you didn't want to carry the position on the way. Well, because I'm not an idiot is the answer to that one. Shit, Edinburgh, isn't it? Yep, that's right. No problem. Just BTC 10x leverage. Good man. Good stuff, buddy. It's an Edinburgh accent. Yeah, absolutely is. Where are you from? That you recognize the accent. Appreciate that. I'm a big fan of yeah, you're right, mate. Edinburgh. Seeing all the smiley faces from Swisher V Baby makes me warm inside. Thank you so much for that. How beautiful when the lines match the bars. Always learning. Dominic's, are you familiar with all these different indicators? Yeah. Oh, by the way, are you familiar with all these different indicators? You might not be. Just before we go, I already explained what numbers I'm using on those moving averages. There's two that I didn't explain. It's this one here, that red dotted line, and that white dotted line. They are, of course, the SMAs, and they are 50 and 200. Okay, and these ones here are all EMAs. As you're tighter to the price. They speak for themselves why I do that, by the way. Exponential moving averages are more responsive. These are lower numbers. There you go. There is an obvious disconnect here between the 50 and the 54, but that's besides the point. It's not really. It's the exception that proves the rule of the thing that I just said. Whatever. Ooh, look at that for hidden bullish divergence. Look at that. So, like, you know, again, why did I get out of that trade at that point? Well, I mean, I didn't know this at the time, but looking back at it now, if we push on up the weight, that could take us to our next level. I've not seen the I mean, this here, bearish divergence, right? Bearish divergence here between these 2 points. You know, this is what I could see whenever we came in there at the 4.414 and then turned around. So great, you know, that we had that. And that bearish divergence. So that was like what took us to that point. So far though, what have we done is we've stayed above the neutral line. Crucially though, what have we stayed above? Well, we've stayed above after the, you know, we've stayed above this area just here, which means we've not had a swing failure just quite yet. So like, while there is obviously, you know, this little retrace in the market, it's not like gone into full negativity mode quite yet in terms of these small term time frames. This market obviously still being open and all that stuff, right? And all that stuff. So where are we? We've got 9 concurrent viewers. We're back to where we are. So like I said, I spent a lot of this episode here at the start of it talking to just 9 viewers. A couple of bits of news, right? It's midweek. I'll be doing another stream on Friday. My stream on Friday will be significantly shorter because I'm fed up doing 3-hour live streams when I say to myself in advance I'm going to only do it for an hour. So on Friday it's going to be shorter. Another bit of news is that I think I might do a completely different type of episode. Maybe even I think probably on a different channel as well. Not sure. But I've got an idea for another type of episode. Maybe what I'll do on Friday is that type of episode where I actually discuss the Wheel of Time fantasy theory, fantasy books, novels, and have the charts up behind me. I just want to chat. I just want to chat about Wheel of Time, and I'm thinking about starting up a Wheel of Time YouTube channel just for the discussion of the books and then the upcoming TV show, and when the TV show is out, all of that. Now, of course, I don't expect any of you to care, but if on the off chance Horn Hunter tunes in here to this particular moment of the show, somebody who has just a name, Horn Hunter is their name, and I spotted that and I thought that guy is a fan of Wheel of Time, and I've discussed Wheel of Time with him a tiny little bit whilst doing TA in the past, and I think to myself, I mean, about 4 or 5 years ago I thought to myself, I'm going to do a channel on YouTube and I'm going to do it about the Wheel of Time, and then I never did, and then I ended up going for this one, which is ridiculously hard. I mean, talk about like the difficulty levels of the channels and that, and then I watched the other ones for entertainment, and I'm thinking to myself, you know what, I'm going to make one of these other channels. I'm just going to chat with people about the Wheel of Time. I don't need to be right or wrong, you know, don't need to, you know, make people's money, and I'll continue to have a real positive impact on people's lives by causing real change, affecting real positive change for good by teaching them about this life skill of technical analysis. I can also talk about Wheel of Time at the same time. And for anybody who ever looked up, like, you know, rocky.outcrop.com on the Wayback Machine or whatever, you will notice that that I started off the website, which is now isn't up at the minute. I'm still on the domain name. I'm going to remake the website in the next wee while. I lost all my data. It's all gone, so I'm going to have to remake it from scratch. No big deal. But if anybody did ever look at that, then they would see that the first couple of things that I talked about on my website was that I was like, oh, I'm going to make a blog for cryptocurrency and the Wheel of Time. Well, maybe I'll be making my way back round to doing that at some point. hidden divergence is continuation, not reversal. That's correct. Continuation divergence. Hidden divergence, good way of talking about it is continuation divergence. I'm from all over the UK, but I have friends from Glasgow, Edinburgh, Perth, Aberdeen, and Oban. My goodness, that's quality. You've got a good Scottish cohort of friends there. That's quality. The Scottish contingent, big us up lot. That's quality. Maybe your accent is what people mean from America when they say, have you got a British accent? Then maybe you actually are one of the only people who actually has that. I wonder what your accent's like. These all around the UK, people who grew up with parents who moved from one place to the next. I'm quite lucky in that I still have my Edinburgh accent, partly to do with like self-identity and stuff like that, because I lived for a chunk of time as in my formative years. Did a chunk of high school over there in Northern Ireland, but my accent remained as an Edinburgh one because better. I just split the Scots into Highlands and Lowlands. That's right, Teuchters, Highlands, Teuchters. Now, it's not officially a bad phrase, so I'm not going to get it bad. It's not bad, right? There's just simply not enough of us for that to be the case. Besides, as well, we're Scottish, so not a single one of us feels bad really when you use phrases like that. I mean, when a common phrase in Scotland is "that guy's a good C word," then you know, little things like saying "Teuchter's" not that big a deal, although it is technically a derogatory term. Anyway, and then we've got us, or Lowlanders, and the derogatory term for us compared to a Teuchter, if we're saying you're a Teuchter, what's the derogatory term for us? It would be "shut up, you English bastard." Because the lowlands, of course, were right next to England. Yeah, anyway, Rocky, what's confusing me is that you're only using one peak or trough. I thought you have to compare it to another. When you're looking at divergences, yeah, you absolutely do. It's what you do is here, so I'm talking about this as being hidden divergence, and I've got the MACD down below, so you can see here that this is actually a comparison between these two previous troughs. Okay, with this, when I was talking about bearish divergence, I was actually talking about this high and this high and this high and this high, a little bit of that on the go. Now, when I say, and you're like saying, but that's just 1 and 2. Well, actually, no, it's not. What's missing from this is, like, you have this. Right, this is your previous peak, and then you've got this one. Between these 2 points, it's not divergent, right? It's between these 2 points that it becomes divergent. But implicit in what I'm saying is a comparison between several chunks of time. Another couple of notes for you, which are really key. And if you watch a lot of people on YouTube, this is something that nobody talks about, which they ought to. And it's not really key. It's not really key because it's totally doable. But what you want to do is look for divergence against the trend or with the trend, whatever. The trend, i.e., you need to identify a trend, i.e., if things are going sideways with lower highs and higher lows, or higher highs and lower lows, like just some form of like confusion in there, then just scrap it is easiest for you. However, if you're in that situation, then look at the context of what you're talking about. Now, Eric Crown is a great example of somebody who likes to look for divergences regardless really of the actual chunk of price action's trend right there and then. You might be looking in a triangle, for instance. The price action could be doing something like this. And you might be like, and he might say at the time, well, looking between this low and this low, which came lower, actually we've got this. We can see here that there's that the oscillator at the meantime went like this, and oh look, there's this divergence here, and this is bullish divergence. Okay, while the overall thing is is essentially going sideways, right? Now, he's good at it, and he's done that as part of his analysis for a number of years, and that's okay, right? It's okay, except it's definitely a case where you need to look at the context. Now, he doesn't take the time to explain this to anybody, but I'll just do it since we're talking here, and I should have tuned out an hour ago or an hour and a half ago, but we're still here, and this video is called what, GME something now, but whatever. you want to be able to say, like, well, look, you know, the run up to this beforehand was a bull trend. We're seeing this as it's got this bullish implication during this phase of consolidation, and I'm not ignoring any other sorts of things. I'm looking at it, and I'm looking for the divergence. I'm looking for that hidden divergence. I'm looking for that bullish divergence, and I'm putting it into the context of where we are just now with regards to the price action, and bearing in mind the ultimate outcome from it, and saying that because you might, you know, what you can do is you could say is you can find yourself in a situation where you're saying, well, look here, there's this second high was lower than the first high, and the oscillator meanwhile went like this, right? So you could find yourself saying, oh look, we've got this bullish divergence here, and we've got this hidden bearish divergence here. Now that's a real, you know, that's a conundrum that you're giving yourself right there, you know, to begin with. Now you also might see other things happen, like well, whatever, you know. I'm just saying that it's probably best to stick to a trend. You're certainly right, always learning to look back over more than just one, because it's impossible with one, more than just two, because that's not giving you a context, but 3 or 4 of the previous highs and lows to really kind of try and identify something like that, right? That's what you got to do. And it's obviously easier in a trend because you're looking at divergences or continuation or reversal signals against the trend that you're in. Far harder to do that in terms of the oscillations within sideways movement. But what you might find is that in this situation, that the previous price action leading up to it was in fact a really strong upward trend, right? And then what you're saying then is that if you're looking at this and you're calling this divergence when you've got a low here and a low here, and you're talking about it in context of the overall upward trend, and you're trying to say that this is bullish divergence versus this, then you're going to the point where actually no, you're wrong, because you're identifying that the trend is towards the top side, which means that that's not what that is, strictly speaking. But you can sense the divergence in terms of the this not playing out, and in terms of you not getting, in terms of you, there's the struggle to go lower, and then you're really looking at it and saying, well, what's the significance of this high not having gone quite as high as before, and really trying to figure out the overall like you need to look at it. You need to look beyond just the context of that little bit that you're in. And if you do start saying things like we've got a downward trend here, then you're only using, then at this point here you only have 1, 2 lows, and you've got so you've only got one lower low. That's all you've got, and at this point you've got just a higher high in between. So it's not there. Whereas if at this point here, after the market's gone on for a bit, then you're seeing different things here, then you're looking at it past the point where you've already had a few different highs and lows, and you're able to make to make an assessment based of this without it simply being negated or undermined by the structure of the market beforehand. Anyway, these are the sort of things that why would anybody take the time out to try and explain anything like that while they're just trying to look at a chart and just say, oh yeah, I can see some bullish divergence here, and then move on, because that's okay, because that's all they're really trying to say is that there could be something else in there to either go with or against the prior trend at any given time. I mean, you've got like a few moving parts when it comes to doing technical analysis. Now it's just like a padlock with 5 different numbers on it. There's only 5 different numbers, so how many combinations could there be? Well, obviously in a 5-number padlock there's 99,999 different combinations, so a lot, right? We're from just those 5, and that's 50,000 combinations in fact, because there's 0 as well. I forgot about that. So whoops. So yeah, it's 50,000, 51. You got 50,001 combinations. There you go. It's even hard to speak sometimes. You got 50,001 combinations on a padlock with 5 different number choices that go between 0 and 9. Okay, more than 50,000. Wow. And that's where so like, you know, it's hard to explain these things. There only are a few moving parts. The words that you use and everything else will be the same. It's just that it's all about the nuance, okay? And it's all about learning things over time. Anyway, why did we come over to this chart again? We came over to this chart again to do what we did. We've done it already, and I've explained it all already. In terms of this small term time frame, if you're looking at this right now, be cautious if these two cross over. Obviously we've moved towards the top side. In terms of the larger time frames, we've only done what we needed to do, and we've gone up there and we pulled back since. I would overall be looking towards a retest of the 3.414. And what do you see having happened here? Well, it's close enough with regards to this, and we've done it already. At which point, I don't care, I'm not in this to trade it. I wasn't in this to trade it earlier on, I just did it kind of out of a weird sort of like, oh, I'll just do that feeling that I got from time to time. I also broke my own rules by increasing my position size at my own detriment ultimately, because I was correct in the position. I stopped out of it needlessly, came back into it again, used my average normal position size thing, and then didn't recoup the losses that I'd made in stopping out of a trade, which ultimately, had I not stopped out of, I would have made, you know, much more money on whatever. It's all good in the hood. That's just how these things go, and that's why I came here, and beyond that, who cares? Yes, in TA there are known unknowns and unknown knowns. Exactly, that's exactly right. Lol, when Rocky describes the bad examples, that's exactly what I do, lol. Whoops. Do you recommend minimum time frames to use divergences? When trading stocks, I find it really hard to trade during the day because the time frames are so small. They're not really educators, they're entertainers pretending. That's the other chaps, I guess. 101 fractorials, loving math, 100,000 combinations up to 0 up to 99,900. Yeah. So there's five numbers on it, and obviously you can start at 0000000. So that's 1, and then when you put in 0000001, so you're on your first change. That's your second number, and of course then naturally you end at oh yeah, no, it's not 50,000 either. Yeah, like you said, 101,000. The math. I need to go, right? I need to go. That's it. You know, I've really well and truly proven with my complete farce of that maths that I don't know what I'm talking about. It's time for me to go, right? No. You're right. I'm wrong. 100,000 combinations, 99. Yeah, there's, because you don't end on 100,000. You end on 9999. But then again, you know, you're putting that 0, so you end on 999999. There's 100,000 combinations, and that includes but wait, no, look, I'm going now, because if I spend any time talking about this, I'll just say something on YouTube that is embarrassing, right? And I'll get my math. I've already, you know when you forget the meaning of a word, you're like, if you say any word, and then you've said it like so many times, and you're trying to spell the word or whatever, and then you get to the point where you're like, oh god, I don't even know anything anymore. You just want to crump up the paper, throw it away, and forget and deny that you could ever speak English in the first place, because you can't remember if, like, the word remember is REMEMBER, or somehow you've convinced yourself it's REBXYRMER, and you're like, I can't remember how to spell remember. I'm pretty sure there's a Q in there, right? That's the position that I'm at right now. It's time for me to go. Okay. Right. Reverse roll call. Thanks so much, James Curran. By the way, that's my dad. Thanks so much, Dad, for tuning in. Really do love. Thanks. Nice to have you here. Good family experience. Thanks very much, Tradespot, for tuning in. By the way, that's my brother. That's it. It's family stuff here, and just like that, much love to everybody out here who's not in my direct family, such as Always Learning, Project Nucleus, Swisher V Baby, the Nightbot, Dominix, who tuned in there later on as well with the chat, with the old GME chat, David, who tuned in at some point, I guess because of GME as well, holding 914 shares, so let's hope that things are pretty good. Excellent exit strategy. That's cool that we were talking about that there. That's nice that you gave me a nice bit of chat or whatever. I don't know, 69,420. Oh, that's right, that's talking about Tradespotting. Well, great, good that you appreciated Tradespotting's exit strategy. Navanethan, thanks so much for tuning in. By the way, for everybody wondering, this is a Navanethan hat. It's very much from the man himself, sent from his hands to my very mandibles. No, my hands, not my mouth. Tradespotting, Dominance, thanks so much for tuning in. Always Learning, thanks so much for tuning in. Oh yes, TR Castillo, the guy that tunes in for GME but can't help but stay because the TA is so good. Oh, we caught you, we trapped you, we honey trapped you. Michael John Scott, known as Formica to his friends, of whom I am one. Hi, thanks for tuning in, Formica. Swisher V Baby, I've already given you a shout out. You don't deserve all those shout outs. Go hide and go to your room. Sorry. Yeah, no, you deserve all of them and more. Now, Ethan, yes, you too as well. Always learn, yes. Wish of you, baby, yes, yes. Okay, cool. Said all you guys as well. Peter Hewer, that's right. You were here earlier on as well. Great guy, one of the very first subscribers to the channel. Wonderful stuff. Much love to that guy. Dan Anthony, thank you so much for tuning in. I'll have to talk about how you can make more money short than you can long in some other episode. It's just like what I went through. I'm there now with the padlock thing and me not being able to count to 10 properly and all the rest of it. My brain's broke now, so it's too late for that. K-Doc, thanks so much for tuning in, despite the fact it was buffering. Sorry about that. Thanks for that. Felix Jabu, thanks very much for tuning in earlier on. Dude man, I'm so glad I was able to help you. Thanks for tuning in. Josh Lester, I'm just looking for some closure. And all that good stuff. Right, cool. And did I miss anybody? Zoner, maybe I missed you. Stanley Knife, maybe I missed you. And anybody else who was here earlier on who you know I appreciate you. Okay, right, so that's it. So yeah, so we're at the end of the show. So there's very little for me left to chat about. I've got my bit though. Word, not that bit. Hey, you Kirky, how you doing? How you doing? What is you're going to have to tell me your name because I keep forgetting it. And you're going to tell me your name as well. That's not what I'm looking for. Where's my screen? Final scene. And I think you should be able to hear me here as well. I think you should. Might not be able to. I think you should. Yeah, so anyway, just this is the final screen, so we can chat here for a second just to say cheerio. Thank you so much to everybody who is Patreon. Really do appreciate it. That number's not gone up since the last screen. In fact, since the last time we ended this, in fact, it's actually gone down. I don't want to remove Damo from the list though, because he's actually a really generous guy, and he just doesn't want me sharing his email address by accident on live streams like I seem to have a habit of doing by accident when he's there. So whatever, it's all good. But anyway, yeah, so he still counts as a patron. So anyway, you could be a part of this, keep the channel going, pay it forward, keep it going for people next year, all the rest of it, running it like a business, nowadays. So if it can't wash its face by this time next year, well then it can't wash its face. It's all good. I'll be doing other projects by then anyway. For instance, the cryptocurrency project, which is launching, which will be launched by 2022 for sure anyway, and much sooner than that. We're talking really soon, but anyway.